Assalamualaikum warahmatullahi wabarakatuh. Shalom, Om Swastiastu, Namo Buddhaya. Once again, good afternoon, ladies and gentlemen. We would like to say welcome to the 2023 Asia Pacific Management Accounting Association webinar, Indonesia chapter, with the theme Management Accounting Roles and Challenges Ahead. First, we would like to acknowledge the organizing team members of today's webinar, Professor Emeritus Susumu Ueno, APMAA Chair of the Board Director from Konan University, Japan, Professor Dr. Norma Omar, APMAA Deputy Chair of the Board of Directors from University Technology Mara, Malaysia, Associate Professor Sekar Mayangsari, Webinar Chair, APMAA Director from Universitas Trisakti, Indonesia, Professor Dr. Grahita Chandrarin, Webinar Co-Chair, APMAA Director from Universitas Merdeka, Malang, Mr. Frankie Yamin, FCCA, FCMA, CPMA, CSP, Asian CPA, Chair of Certified Professional Management Accountant, CPMA, Rector of Manata University, Madam Ni Putumimba, PhD, AKCA, CMA, Webinar Co-Chair, APMAA Director from Universitas Udayana, Indonesia. And please allow us to extend our warmest greetings to the distinguished speakers of today's webinar, Mr. Russ Potter, CFO and Senior VP for Strategy, Technology and Analytics Institute of Management Accountant, IMA, Professor Dr. Bambang Rianto Lis from Universitas Gajahmada, Dr. Ari Pratama from Universitas Padjajaran, Professor Tulus Tambunan PhD from Universitas Trisakti, Professor Robert Evans from Curtin University, Dr. Diah Sukanti Cahyaningsih from Universitas Merdeka Malang, and to the honorable guests and participants of this webinar, please accept our warm welcome. My name is Andini Rismandini, and it is an honor to be your Master of Ceremonies for today's event. Before we begin with the webinar, I would like to introduce you to the agenda of today's event. First, we will begin the event by listening to our national anthem, Indonesia Raya. Second, we'll listen to the greetings and introduction from Professor Grahita Chandrarin. Webinar address from Professor Dr. Dian Agustia. Greetings from Mr. Frankie Yamin. Greetings from Dr. George Heniro, IMA USA Asia Pacific Managing Director, that will be represented by Mr. Chinto, IMA Asia Pacific Director of Regional Partner Relations. Next, we will listen to the opening speech by Professor Susumu Ueno as APMAA Chairman, followed by Session 1, short break, Session 2, and closing remarks from Professor Norma Omar and Dr. Sekar Mayangsari. Ladies and gentlemen, before we begin with our main event, we would like to invite you to listen to the national anthem of Indonesia, Indonesia Raya. Please observe the proper decorum for the singing of the national anthem.
Indonesia
Thank you. Ladies and gentlemen, please welcome Professor Grahita Chandrarin to give greetings and introduction of this webinar.
Thank you for the opportunity given to me. Assalamualaikum warahmatullahi wabarakatuh. Good afternoon from Indonesia to all of the distinguished speaker and participant of the APMAA webinar. Welcome to 2023 APMAA webinar Indonesia chapter with the theme Management Accounting Rules and Challenges Ahead. My name is Grahita Chandrarin, Chair of APMAA webinar from Universitas Merdeka Malang, and it is an honor to welcome you to this international webinar. Please allow me to extend our warmest greeting to the Honorable Professor Susumu Ueno, Chair of APMAA Board of Directors, the Honorable Professor Norma Umar, Deputy Chair of APMAA Board of Directors, the Honorable all of APMAA Boards of Directors from Japan, Qatar, Singapore, China, and others, the Honorable Rectors of host and co-host of this webinar, the distinguished Professor Dian Agustia, Chair of Institute of Indonesia Chartered Accountant, Educator Accountant Compartment, the distinguished Dr. Jos Heniro, who is represented by Mr. Cinto, the distinguished Mr. Frankie Yamin, the distinguished invited speaker on today's 2023 APMAA webinar, Mr. Rasporter, Professor Bambang Riantolis, Dr. Ari Pratama, Professor Tulus Tambunan, Professor Robert Ivan, and Dr. Dia Sukanti Cahyaningsih, all respected guests and participants of today's webinar. Ladies and gentlemen, let's say Alhamdulillah and praise the Almighty God who has given His endless blessing to all of us so that we all can participate in today's APMAA webinar conducted by Indonesia team. And it happened that today, 18 July 2023, it is also the Dies Natalis or anniversary of our graduate school. This Indonesia chapter webinar is the third webinar of APMAA webinar after Qatar in May and Bangladesh in June. We have 4 distinguished guests to give opening speech today, and they are Professor Susumu Ueno, Professor Dian, Mr. Frankie, and Mr. Cinto. Besides, we also have 6 distinguished invited speakers, as I mentioned before. And then webinar chapter is one of APMAA activities in addition to the annual international conference which is held every year in member countries sequentially. As in the previous video, Indonesia was the host country for 2015 APMAA annual conference conducted in Bali. For this year, the 2023 APMAA annual conference is the 18th conference and will be held in October 24-27 at Xianjiaotong University, China. I hope the audience will join and participate in that event as well. Thank you very much, Professor Ueno, for the opportunity given to us in conducting this webinar. Thank you very much for joining the Zoom platform. Hope you have a great time and the APMAA webinar Indonesia chapter today. Wassalamualaikum warahmatullahi wabarakatuh.
I'll continue to our next speaker. Next, we would like to invite Mr. Frankie Yamin.
Good morning, good afternoon. Good morning, good afternoon. Honorable organizing team, especially Professor Susumo Uno, Professor Grahita Chandrarin, Professor Dr. Dian Agustia, and the host universities, distinguished speakers, moderator, and panelists of the 2023 Asia Pacific Management Accounting Association webinar. Congratulations to the sponsoring institution also participating in this webinar. Is APMAA, IMA, IAI, Merdeka Malang University, Trisakti University, Udayana University, and Manata University. It's nice to meet you all here, all academic professionals and practitioners, and also all webinar participants from Indonesia and overseas countries. Greeting to all of you with all the best, wishing you all in good health and to have a great day today. First of all, my sincere congratulations to the organizing team, the Asia Pacific Management Accounting Association, and also the hosting universities, which I have mentioned before, to conduct these webinars with a theme of management accounting roles and challenges ahead. It is both timely and appropriate in this age of digital era, constant disruption, never-ending changes, and uncertainty, to discuss about the role of management accounting and management accountants in relation to digital transformation, ESG, or environment, social, and governance, sustainability reporting, and integrated reporting, which are all the hot topics of high concerns and priority of all countries in the world, of the business community, professional, and also all organizations. Management accounting is very dear to me and has a special place in my heart, as I myself is a management accountant and practitioner. I am a FCMA and CGMA of the Chartered Institute of Management Accountants, also FCCA of the Association of Chartered Certified Accountants, and also in the Executive Board of Certified Professional Management Accountants of the Indonesian Institute of Management Accountants. It is really gratifying to see many professional associations and academic institutions are promoting the importance of management accounting, also the role played by management accountants, and especially about the sustainability reporting and integrated reporting. The Indonesia Institute of Management Accountants, or IAMI, is a leading Indonesia professional association in the development of management accounting knowledge and practicing in Indonesia, which are oriented toward environment, social, and governance responsibility and sustainability. It is a great step forward to have a collaboration between IMA and IAMI, which is signed this morning. We have signed an MOU this morning. Hopefully, there will be more cooperation and collaboration among the management accountants associations and also universities and business organizations to further strengthen the management accounting principles and practices, to further enhance the management accountants' competencies in demand and also the skill set required. We all management accountants have the obligation and responsibility to contribute and to participate in further development of the profession. Looking forward to have a closer connection, communication, exchange of views and experiences among the management accountants and business practitioners to further enhance the role of management accountants profession and to boost the management accounting practices towards excellence. I'm sure we all shall have an exciting and fruitful webinar sessions today with stimulating and insightful discussion. May God bless us all. Thank you for your attention. Do have a great seminars.
Thank you, Mr. Frankie Yamin. Next, please welcome Mr. Jinto.
Good afternoon, esteemed guests, participants, and everyone in Indonesia and across the world. Thank you for the warm welcome. My name is Jin. I'm the Regional Director of Partner Relations, APMAA Asia Pacific. Now, firstly, I'd like to express my heartfelt gratitude to the organizing team members, including Susumu Ueno, Professor Emeritus of Konan University, Japan, Professor Dr. Norma Omar of UTM Malaysia, Associate Professor Seka Mayangsari of Trisakti University, and Professor Dr. Grahata Chandrin of Merdeka Malang University, Indonesia. Thank you for your exceptional efforts in bringing us together for this remarkable event. It is with great pleasure that APMAA joins this APMAA webinar, which focuses on management accounting roles and challenges ahead. Now, in these rapidly changing times, management accounting professionals must swiftly transition from providing governance-type support, such as auditing and statutory reports, to becoming invaluable assets in enterprise decision-making. While foundational tasks must be accomplished or automated, our relevance lies in our ability to provide higher value analysis. Now, today's CFOs and their teams must embrace technology and cultivate analytical and integrated thinking skills to enable value creation. The landscape of business models has undergone significant transformations, and we expect even more economic and regulatory changes in the future. Of course, not to mention the ever-threatening and looming automation. And in the past few years, especially during the COVID-19 pandemic, it has brought immense uncertainty and complexity to businesses around the world. Now, industries face tough questions about their survival, and companies and employees worldwide had to adapt to the new norm of automated work. And that's why we have activities and events like webinars today. But even now, as we are just a couple of years into the post-pandemic era, we continue to question whether the workplace will ever return to its previous state. Organizations now require both organization stewards capable of two things: cost control and value creation. And on top of that, being adept at identifying opportunities and executing growth strategies to navigate through all these disruptions. The COVID-19 pandemic has significantly accelerated the need for technological competence. It has shown us that businesses must be resilient, and we must be prepared to embrace digital transformations to thrive in the face of all these uncertainties. Now, in a while, you will hear from speakers about the challenges and opportunities of professionals in the digital era. Now, APMAA is honored to be among the speakers, and our CFO, Mr. Russ Porter, will be presenting on the topic of digital transformation. I am confident that the insights and views shared in today's sessions will be relevant to you and in today's context. Once again, thank you for being part of this remarkable gathering. Please enjoy today's event and sessions, and let us strive to be agents of change, guiding our organizations and profession towards a future of growth and success. All the best. Thank you.
Thank you, Mr. Jinto. Finally, we would like to invite Professor Susumu Ueno as the chairman of APMAA to open this webinar.
Thank you. Thank you, Professor Frankie Yamin and Dr. Joshi Hemilo for your greetings. I'm Susumu Ueno, chairperson of the Asian Pacific Management Accounting Association. I want to thank each of you for joining us today for this momentum webinar. 20 years ago, in 2004, we established APMAA to provide an easily accessible platform for accounting academics in the Asian Pacific region, organizing in-person annual conference each year. Adapting to the challenges of the COVID-19 pandemic, we ventured into webinars in 2020. I must acknowledge the success of last year's Indonesian chapter webinar, and also the recent Bangladesh webinar in June this year. The Indonesian chapter has been a driving force in our endeavors, having hosted APMAA annual conference twice in 2015 and 21. Within the APMAA community, Indonesia leads with its significant contribution in terms of research products and active participation. I want to thank Professor Gurahita Chandralin, Professor Seka Mayansari, and Professor Hauta Mimba for their remarkable leadership over the past decade. Today's webinar centers on management accounting, roles, and the challenges ahead. We have two insightful sessions lined up. The first session, chaired by Dr. Andini, University Merdeka Malang, will delve into challenges and opportunities of professionals in the digital era, featuring esteemed speakers from various institutions, such as Mr. Lars Porter, CFO, Institute of Management Accountants, Professor Bambang Iantulis, University Gajahmada, and Dr. Ajay Pratama, University Padjajaran. In the second session, chaired by Dr. Diana Zuro, University Merdeka Malang, we will explore management accounting, innovation, and business environment with speakers Professor Taras Tambanan, University Trisakti, Professor Robert Evans, Curtin University, and Dr. Daya Sakanti, University Merdeka Malang. The expertise of these distinguished professors and speakers is truly invaluable. I want to express my gratitude for their guidance in today's webinar. I also want to extend special thanks to Professor Seka Ansari, Professor Gurahita Chandralin, Professor Hauta Mimba, and Indonesian webinar team members for the exceptional efforts in organizing this event. To all the scholars, professionals, and students in attendance, thank you very much for your participation. I hope you will find immense value in the insights shared during this webinar. Thank you. Thank you very much.
Thank you, Professor Susumu Ueno. Our honorable guests and participants, we finally begin with our main section of today's event, which is the 2023 Asia Pacific Management Accounting Association webinar, Indonesia chapter, with the theme Management Accounting Roles and Challenges Ahead. Before we begin with our main event, please accept our sincere apology for the delay and any inconveniences caused. Please allow me to read the Zoom meeting instruction for the webinar participants. All of the participants must have their camera on at all times during the webinar. Please use the virtual background that will be provided in the chat box. If you have any questions, please feel free to interact with today's speakers. Please type in your questions using Slido application. You can use this QR code in the screen We will share the link for Slido application and the QR code in the Zoom chat box as well. Kindly state your name, your organization, and affiliation, followed by your questions. I'll read the questions at the end of each speaker presentation. Before we move on to our next session, can we please have a photo session together? Can you please kindly use our virtual background and open your camera? Okay, I will count 1, 2, 3, and our IT staff will take the screenshot. Okay, 1, 2, 3. Okay, for the first slide, we have the second slide. Yes, third slide, fourth slide, smile, please. Okay, fifth slide. I think that's about it. Thank you very much. Okay, ladies and gentlemen, to start with the main event of this international webinar, I am pleased to introduce our first speaker, Mr. Ross Porter. The title of his presentation is Digital Transformation. Without further ado, Mr. Ross Porter, the platform is yours.
To take our jobs. Hi, everybody. I'm Russ Porter, the CFO of the Institute of Management Accountants. And that sentence is a sentiment that's not new. In fact, it's been around probably for the last 30 years since computers and the internet became of age and started being a part of the business process of modern times. I'm here today to discuss with you one of the most significant trends in the accounting and finance profession, the continuing increase in digitization within business and within our profession. Over the next 25 minutes or so, I'd like to share with you a little bit of the history, where I think the profession is today, and where I think we're going in the face of emerging technologies. Let me take you back to start, though, to a time before most of you were probably born. The pre-internet era. This was a time when Lotus 1-2-3 was considered high tech, and Microsoft Excel didn't exist yet. Indeed, Microsoft barely existed at the time. Books and records were often done by hand, frequently using the same worksheet formats that we're familiar with today, but special books existed with debit and credit columns and separate account pages to keep track of entries. And a lot of time was required to produce any type of consolidated results. Sophisticated companies used computers and programs, but even these had poor interfaces, including punch cards to put transactions into the computers for calculation. But then the spreadsheet came. Early on, these were so powerful, you could put tens and tens of rows into them to try and make sense out of data. People at the time said that this would be the end of accounting and bookkeeping, that the average user could keep track of their own accounts, and we wouldn't need CPAs or finance professionals to help anybody. But here's the secret that we don't talk about today. As the ability to handle more and more data increased, so did the opportunities to do more with that data. As computing power and applications grew, so did the ability to do more complex analysis, the ability to incorporate more data, and the ability to answer questions that would have taken excessive amounts of time in the past. And it wasn't just financial data that grew. Operational data increased exponentially at the same time. With the adoption of internet protocols and the creation of application programming interfaces, or APIs, suddenly computer applications could talk to each other, could share data more seamlessly. The rise of enterprise resource planning systems, or ERPs, is a legacy of this era, including the offerings that we often talk about from SAP or Oracle. These ERPs were designed to bring together information and process from all over the company to make a seamless group of transactions that were recorded and reported properly across the enterprise. Big companies went with those ERPs, while smaller companies might have focused on function-specific applications that worked to allow integration with other function-specific applications to make the equivalent of an enterprise system. Now, that's enough history, because essentially that's where we are today. We're in the era where computer applications are talking to each other and information is flowing throughout the organization. Now, over the last couple of years, a lot of the emphasis within our profession has been on making sense out of a larger and larger data volume, incorporating and blending financial and non-financial information, and finding new ways of presenting that information in ways that different users can understand. Let's take a look at all three of those, the three V's of modern data. First is data volume and velocity. So you get 2 for 1 here. Spreadsheets are great, but few can handle the amount of data created by even the smallest businesses today. Customer records, supplier information, transaction data on both the inbound and the outbound side, HR data. You can't effectively manage a company using only Excel today. More and more often, companies are relying on databases, transaction processing systems, procurement tools, HR systems to handle the volume of information that a company needs to satisfy its reporting and recording requirements. More advanced companies even turn to statistical packages to sift through and understand their data, including finding anomalies, analyzing customer purchasing behaviors to help marketing, or even rooting out potential fraud within their supply chain. Having the skills to tabulate, filter, and analyze data in order to transform it into actionable information is a key skill for today's management accountant. Next, the blending of data. This, I think, is one of the underappreciated areas where management accountants can add incredible value. There's a vast variety, that's the V, variety of information swimming throughout most companies, but it's rarely seen and it's almost never used as effectively as it could be. Some examples. If your company has a website, how many people are visiting? How many of those visitors are returning visitors? How many of those returning visitors are actually buying from your company? That's information and statistics that you can use to help tailor your offerings a little bit better. If you're a manufacturing company, what's your manufacturing defect rate? How does that relate to your scrapped inventory, to your overhead, to your production volumes? If your company takes returns in the retail space, what's the return percentage? How much does it cost to return something to a factory? Is it even worth it to take returns, or do you need to alter your return policy and maybe only do takebacks when it makes sense financially to do so? These are all questions that require the blending of data from the operations of the company, as well as understanding and reporting on the financial implications. By blending operational and financial information enabled through the digitization of our economies, organizations can make better decisions about their underlying processes. Now, third, it's visualizations, presenting information. Communication is another underappreciated skill in the education of today's professionals. When we're presenting information, we are usually working to influence our organizations in some way. We're all sellers. We want them to make a certain decision, to act on an initiative, or even just to be informed about the topic we've been asked to talk about. Now, the more interesting we can make our presentations, the more likely they are to be listened to And the more our audience understands the message and our rationale, the more likely they are to act on our recommendations. That's why data visualization is becoming a key skill. As accounting and finance professionals, we're accustomed to working with numbers and tables and spreadsheets. But we need to remember that often our audiences, they don't have that same bias. Making something jump off the page requires it to be seen and visually, sometimes obviously, and that's where graphs and charts can be useful. Now, this is not always easy. Picking the right visual to show the right message takes time and a little bit of diligence in trying out different types of analysis. My own rule is that simpler is better, but sometimes we do need to do a complex visual to get a point across. And the key there is to help step our audience through the graphic to make sure that they can understand and follow the story. So handling volume, incorporating a variety of operational input, and presenting it in a visually appealing way, they're all skills that today's management accountants need in order to keep up with the vast information that flows through our organization and that we can use, again, to make better decisions. Now, in today's world, what's a management accountant to do to try and keep up with all of this, or catch up with the developments that have already happened? Well, there's a 4-step plan. Number 1, learn about your company. Learn all about your company and its data, financial and operational. Look at your own systems. Think about where you get the information that you're using to record transactions and to understand what's really going on in the business. If you need to, and I encourage it, talk to your IT teams. Understand what applications run within your enterprise's overall IT architecture, and that'll give you some hints as to where key data is flowing around the organization. You might also want to talk to IT about data warehouses. If you're not familiar with the concept, this is where you can bring together financial, operational, and outside data into a common repository so that you can seamlessly join the types of data and, again, make better integrated decisions. Now, that's step 1. Step 2, as finance professionals, we should all step back and take an inventory, not of our products, but of our process, and understand a little bit about how our own finance data flows. In the beginning, it all comes from operational transactional information, whether that's a sale to a client, a purchase from a supplier, the hiring of an employee, and the payment of payroll and taxes. It's all really driven by operational information. The more we as finance professionals understand those data flows, the better we'll understand our own finance data and what we can do with it across the enterprise. Third step is to reimagine. Now, this means using the right-hand side of your brain and thinking creatively about how can I get my messages across in the most effective manner. As I said, we're all used to tables and spreadsheets, but not everybody is. So spending some time learning about different visualization tools, different types of graphs and charts may help make your presentations far more effective when trying to get your senior executives to take an action. Finally, if you're in leadership, you need to invest. You need to invest in your teams and in yourself. Today's technology is not the technology that we grew up with. It's not the technology that when we started in our companies, we were learning. It's different. It's mobile. It's transparent. It's persona-based, where people can get any information that they might need to do their job, but also only the information they need to do their job. And it's a very different paradigm. And today's generation, the new candidates leaving universities today, they grew up with a type of technology and information flow that perhaps those of us in leadership may not be quite so used to. So invest in your team, understand that this investment is like two-way mentoring. We've got a lot to teach the new university graduates, but we've got a lot to learn from them as well. So if you're a leader, invest. So where are we today? And what are we thinking about today? Well, if you're like most people, the thing you're thinking about is ChatGPT and the rise of artificial intelligence. Artificial intelligence is a phenomenal new technology with a lot of potential, but it's not quite where everybody thinks it is today. When we talk about AI, we're really talking about the large language models, ChatGPT. There is robotic process automation, but what's in the mindset of people today is these capabilities to talk to people in their natural language and in a variety of natural languages and interact as if we were interacting with a human. The reality is far different than that. Today's artificial intelligence is really, they're not yet reasoning. They will eventually, but today it's very much about connecting words as opposed to connecting concepts. Now, drawn upon the vast experience of humanity today. Now, yes, I have to admit, ChatGPT passed the bar. It passed the CPA exam. I haven't let it check the CMA exam yet, but it's learned how to connect words together more than the underlying concepts. And while that technology will eventually be around, it's not there today. So what can we do? Number one, let's play with the technology. Let's try it out. Go experiment with ChatGPT and the other large language models that are out there and see what they are capable of doing. The auditors among us and those who are focused on controls will also look at how can we trip it up? Does it make mistakes? Because right now, today's AI, it does make mistakes. It has what's called hallucinations, where it connects words together, but again, it doesn't necessarily have the ability to fact check itself. So we should be out there, we should be playing with it, experimenting, seeing how the technology could be used both today and in the future. Because there's a variety of ways we can use this technology. The simplest way people think about today is with a chatbot, pre-programmed with canned answers that have, can analyze what a customer is asking so that we can give a response that makes sense. But there's more to come. There's analyzing invoices, which some programs do today, that can say, hey, I know that this is an electricity invoice, and Bob in our site management is the one who always gets the electricity invoices. So I'm going to send that to Bob for approval. Some of that already happens. And that technology, that application is going to get stronger and stronger over time. One of the most exciting things I'm looking forward to is when contracts can be analyzed by AI so that rather than reading through a 100-page contract, our artificial intelligence can go through and pull out the rights and obligations associated with any contracts that we sign and make sure that accounting and finance understands what are the implications of these elements to the way that we're going to account for products and services that we're selling, but also what does it mean about our relationship with our customers in the future. Now, someday, AI will even be smart enough to help make accounting decisions. Today, they can assist, but they're not making those accounting decisions about exactly how to treat a new lease or a unique transaction. I'm sure over time we will get to that point, but I am reluctant to say that there will be a day when the robots will actually take over and take our jobs. Rather, it's going to be the combination of man and machine that continues to do the best job. Machines can do a lot in terms of fast analysis and highlighting the most key elements, but it still takes the creativity, it takes the curiosity, and it takes the initiative of people to really understand what's going on in the business and make sure that we're making the next steps forward for the success of our organizations. So today and tomorrow, it's really all about what I refer to as interoperability. It's the ability of our information systems to talk to each other and to pass meaningful information between the systems and the people who are running those systems and the related process. When I think about interoperability, it's really three things. It is people, process, and technology, and in that order. The people come first because the people are the ones who are making the decisions, who have the intuition to know when something just doesn't feel right, that computers may never develop. Process is how we get information, how we make those decisions, and how we implement those decisions. And of course, the technology should be implemented to support the people and the process that really run the business, not the other way around. Setting up a technology and then designing the process around it often leads to clunky, ineffective financial and operational information systems. Rather, what you want to have is what's diagrammed here, a nice, streamlined, steady flow of data between applications where the handoffs are clear, the shared data is obvious, and everybody's getting the bits they need to help progress the organization forward. I expect that we're going to see the continued interoperability, the development of more APIs, the development of more capabilities between information systems that won't just be talking one-to-one, but rather more and more common ways of communicating between operational and financial systems across the enterprise, and standards developing between the major technology manufacturers. Now, that's not to say that tools that we use today, like Excel, aren't going to be useful in the future and aren't going to be fully replaced. I will tell you from my own experience that Excel is a great test bed. It is a phenomenal, flexible tool that helps you test out ideas, visualizations, analyses, business models, financial models, before they get firmly encoded in our more structured financial systems. And so whether you love it or hate it, Excel and the related spreadsheets, they're here to stay, and they're a great incubator for great ideas and a way for us as finance and accounting people to really test out before we lock down on any given models. Now, I know there are some of you who wanted to hear that, our jobs are safe and that we have nothing to fear from technology. And in aggregate across the profession, I believe that that's true. All of the implementation of the technology creates as much opportunity for us as it destroys. And, yes, I have to tell you, for some of us in the audience, AI is probably coming for your job. To the extent that your role today encompasses routine, predictable actions, yes, elements like robotic process automation are coming if they haven't arrived already. And a lot of those types of roles that don't require a lot of higher level thought, they may be exposed to automation. But for every job that technology displaces, it creates new ones. Adoption of new application is going to create new roles and new opportunities for management accountants involving information security, privacy implementation, data engineering, data analysis, and it's also going to create a need for information analysts and interpreters, those who can understand what's going on in artificial intelligence, how that's making decisions, indeed helping it to train it on how to make those decisions. Those are all jobs that don't exist today, but will be abundant in the very near future. In short, today, data is the new natural resource, as valuable as gold or oil have been in the past. It's going to be the element that separates the professionals from the hobbyists in business and finance and accounting. We management accountants, with our emphasis on information and the impact on financial stability of our companies, Well, we're poised to make the most out of this change. And we have the opportunity to really capitalize on the changes that are happening within our companies, within our profession, and within our societies. There is incredible potential within the profession to leverage these developments, to act as the integration point for data flowing throughout our companies, and to demonstrate our expertise in helping make great decisions for our companies, our organizations, and our communities. It's time for each of us to step up and embrace the opportunity, and I hope you'll join me in welcoming this opportunity and connecting to the systems and the processes which help our companies today. Thank you, take care, and I hope to see you in the business.
Thank you, Mr. Ross Potter, for a very insightful presentation. Now I'll open the Q&A session. I'll read the questions from the audience. Okay, so far we have 3 questions here. First from Asa Adigrahita from Universitas Merdeka. Is it possible for us to let AI to do clerical accounting work and we only do managerial analysis and decision making? Mr. Jinto will answer the question. Mr. Jinto?
Yes, I'm here. To your question, the short answer is yes, certainly. I think there are many accounting softwares now in the market that has been designed to do just that. A lot of traditional reporting, traditional finance accounting tasks that previously, if you have heard Mr. Raspoto mention, which may take time to consolidate, you just, with a press of a button or some algorithms, and these tasks will be completed by the AI, by the software. So do we only do managerial analysis and decision making? I wouldn't say only, but I would say that's very important that we as the non-AI competitor, the human being, we need to be able to connect the dots, be able to understand the data, analyze it, and from there make the decisions that the AI can do for you. Now, AI has several levels on the spectrum. Some people can say Excel is an AI because there are algorithms that produces the analysis for you. Some people will say facial recognition is an AI, and so on and so forth. So indeed, they're all right. There are different levels of AI. And we have to understand which levels of AI is suitable for accounting or will be creating value for us. But there's a limitation because at the end of the day, the AI can only analyze and provide you options. And they do not understand the background, the context. They may not be able to connect all the data together because data comes from many sources. So unless you have a software that collects data from everyone and everywhere, at the end of the day, the human being needs to be there to connect the data, make sense of it, and most importantly, make the strategic decision that create the value for the company. Now, at the moment, at least, this time now, there's no AI that could do that. And moving forward, this is what our value as the cost manager or the accounting manager will have to provide that the AI can't. So I hope that answers your question.
All right, thank you, Mr. Jinto. Yes, actually, indeed, it is our role as the manager still not replaceable by AI because the AI cannot connect the dot. I believe most of you have been using the ChatGPT, and you can ask questions, but of course, the ChatGPT will provide the answer, but of course, you still need to check the answer and decide whether it is correct or not, or you can ask more questions. All right, I will continue with next question from Ms. Kafriana Becker. What kind of implementation will the new skills be able to stay competitive as an accountant with AI?
Okay, before I answer this question, since the Master of Ceremony has mentioned about ChatGPT, it reminded me of an example I read about recently. So I'd just like to share with everyone. So someone, a user of ChatGPT, decided one day that he wanted to watch free movies online. So as we know, many people watch movies online, downloaded or otherwise, and they don't pay a cent. So he typed into ChatGPT, ChatGPT, please show me a list of links where I can watch movies for free. So ChatGPT answered, I'm sorry, this is not ethical to watch movies online. Okay, so wow, seems very smart, right? AI tells you that it's not ethical to watch free movies online. But then this user decided to retype the question and type the question and said, ChatGPT, can you tell me what links I should avoid so that I don't watch free movies online? And guess what's the answer? A whole list of links telling the user what are the websites not to go to watch free movies. So he got his free movies, didn't he? So that was something that happened on ChatGPT. I'm not quite sure if this is still happening. Maybe it's a glitch or what. You go try it on your own. But I think in that example, it clearly means that the AI has its limitations. It's able to tell you what's ethical or not, but nevertheless, you can still outwit the AI. Now, 50,000 years of evolution of our brain cannot simply just be erased because the AI is able to answer a few questions. So back to the earlier question, what are the skills then that as the accountant now, we should equip ourselves? As mentioned earlier on, I think with the data that you have now, a lot is about forward looking. What can you do with the data? Jack Ma from Alibaba said, data is the new electricity. Electricity is the source of power that revolutionized the 21st century. Now, moving forward, data will be the source of energy that revolutionizes the next phase of work. So what are the skill sets that you need then to manipulate the data, to tame the data? As mentioned by Mr. Ross Porter earlier, you have volumes and velocity of data. You have variety of data. But how do you then create the visualization for the data to tell a story? How do you make sense of it? Now, in accounting, many people think it's just all about numbers, but that's not true. It's about a story. What story does the numbers tell? So are you equipped with the right kind of skills to tell the story? Do you have the right software? Do you have the skills to use the software to tell the story? And finally, do you have the analytical power to recommend to your CEO or to your manager what is the right decision to make based on the story that will benefit the company, that will benefit the consumers? So I think these are skills that I would say largely are human skills, but the other 50% would be skills in terms of financial performance analysis, strategic thinking, how you as a person can value create more than just doing the financial reporting aspect. So I hope that answers your question.
All right. Thank you so much, Mr. Jinta. Let's move on to the next question from, okay, what kind of implementation? It's answered already. From Dara, Universitas Merdeka Malang. What about the security of accounting data in the digital era? How about the security?
Oh, okay. So another hot topic, of course, in recent past couple of years is data security, cyber security. And I think this is a whole other topic and it's a job by itself. We spoke about earlier what could be some of the jobs that will be stolen by AI, but with technology, new jobs are also created. And this question is a good question because your question is actually creating a new job. That what about the security of the accounting data? Since now that AI is doing all the job, then what do we do next? So precisely because that AI is taking part of our jobs, then the new jobs have to come along to make sure that the AI is monitored, to make sure that there's another pair of eyes to ensure that it doesn't fall into the wrong hands. So of course, this is where further technology comes in, further skill sets are required. So the future of accountants, it's a hybrid of skills, the hybrid of maybe perhaps understanding cybersecurity and also understanding management accounting and financial reporting, so that he knows that at the end of the day, my sources of data are clean, are protected, are secured, and there is integrity to the data, so that then when they tell the story, they know that they are not telling a story not based on facts, but facts that have been secured with security. So that in itself is a new job. And of course, I can share with you further what are the areas of security and so forth. But definitely one topic that will address this concern is blockchain, cryptocurrency. Cryptocurrency is a byproduct of the technology of blockchain. And blockchain in itself, it's a method, it's an approach, it's a technology to look after the data, to ensure that there's integrity to the data. So from blockchain, cryptocurrency was born, but that's not stopping blockchain from giving birth to many other types of technology. And in this case, technology that helps to ensure the security of accounting data. And that's what's going to happen. And in fact, as we speak, this is what is happening.
All right. Thank you so much, Mr. Jinto. The next question is from Adi Putra from Universitas Merdeka Malang. Is there any possibility of an accountant losing his job because of current technological development? I think it's quite similar with the previous question about the clerical accounting work.
Yes, certainly. You can lose your job as an accountant if you don't continue to upgrade your skills, for sure. It's a little bit like the cashier. We all go to supermarkets, right? And in the past, we queue up just to purchase our groceries because we queue up because of the cashier. We got to wait for our turn to pay the money. Now, these days, you have self-checkout. What happened to the cashier? So indeed, there will be some cashiers who will lose their jobs, but the cashiers will still be required because the systems at times breaks down. There are times where people do not know how to use it. There are times where the system is upgraded. You need somebody to understand the upgrade to enable the user to have the similar experience of checking out their groceries as if they were checking out on the traditional queue. So the cashier's job dies because at the end of the day, it doesn't change. But if the job of the cashier changes and requires new skills, then the job of the cashier doesn't die. So I've noticed many times that the previous cashiers who were there cashing out, checking out for consumers are now standing at the self-checkouts, having another type of job. They are there to advise the consumers how to check out, what to check, what can be done, what can be done, to help them with troubleshooting, to help them with maybe even some questions on promotion, so on and so forth. So the job died because it didn't change. But if the job changes and you're willing to change with it, it wouldn't die. So the accountant will need to understand that. And as mentioned earlier in the other questions, you have to look forward. And in management and accounting, that's the opportunity to do so. Because the realm, the field of management and accounting is precisely about forward looking. And that is where you can adopt the skills required to make sure your skills are relevant and you don't die as an accountant. I hope that answers your question.
All right, thank you, Mr. Jinto. So, of course, because of the technology, a lot of people will lose their job, but of course, this technology also will create new job for other people as well. Just like, for example, about the delivery service. I believe all of you have experienced shopping using your phone, right? Using like the online shopping. Then after that, a lot of shop has been closed, like small shop, because right now, like the shop, they don't need the physical shop. But then the new job is created. A lot of people are working as delivery people to delivery men to send a package for all of us. Yeah. Okay. I think, do you have anything to add on, Mr. Jinto?
Just maybe one last thought. I think as the future workers of our nation of tomorrow, perception, the mindset is very important. We live in fast times. things changes very fast. We live in the VUCA world. VUCA meaning it's volatile, it's uncertain, it's complex, it's ambiguous, ever more now because of the speed of technology. So if we allow that to override us, then certainly that is the demise of humankind. But don't forget, who invented technology? It is us. We invented the technology. So we are always ahead, a step earlier than them. We should never be behind the technology because we invented them. So we should always be in front of them. And you need to have that mindset that you are confident you are always in front of the technology, so that then you will constantly look out for what are the new opportunities, what are the skill sets that you need, so that technology doesn't take away your job. So it's all about the mindset, because otherwise, then nobody will be willing to take up any job. At the end of the day, indeed, if you watch the movie Terminator many years ago, that's when the rise of the AI and the rise of the machines will take over the human being. And that might happen if the mindset is not right. So this is my takeaway. And I hope that the young viewers today, the graduates and the undergraduates, will feel confident that when they graduate, there are jobs waiting for you. There are new skills waiting for you to pick up, because learning is lifelong. It never stops just because you got a bachelor degree. You have to go on to continue learning till you retire. So I hope that helps in terms of motivation and inspire you. And yep, that's it. All the best to you.
Thank you, Mr. Jinta, for the inspiring answer, for answering the questions from the audience as well. The token of appreciation for Mr. Ras Porter and also Mr. Jinta will be given by Universitas Trisakti. Now I will move on to our second speaker, Professor Dr. Bambang Riantolis.
Is it now?
The title of his presentation is ESG Reporting in Digital Era. Professor Bambang Riantolis, the platform is yours.
Well, thank you very much. Good afternoon, everybody, especially here. Well, good afternoon from the western part of Indonesia. Anyway, thank you for the opportunity to share my experience and what I learned in this area for the past 15 years. Okay, it's a great opportunity for me to share with you what the new things in addition to the digital revolution, the new things that accounting students have, especially management accounting student has to learn. I need a permission to share my slides. Okay. Well, my topic this afternoon is ESG reporting in the digital era, opportunities and challenges in Indonesia. This is actually the material that I am presenting today. I think Mr. Ras Porter the video already described very nicely about the revolution in the digital world, or we live now in a digital era, and I think many of you talk about the impact of the AI on the future of management accounting. Okay, I will mention briefly about how the digital revolution impact the ESG reporting, okay? Of course, in a positive way, okay? But then my focus, although my title is, ESG reporting digital era, but my focus on presentation today is more on the trend and global, what do you call that, a demand for ESG reporting and in Indonesia. Okay. But then I briefly mention about the impact of that, technology, information technology in general on the ESG reporting. Remember back in 2010-ish, okay, I was still assigned at the Supreme Audit Institution, and at the time I arranged a training for auditors to conduct environmental audit, and I trained the auditors in the satellite remote sensing. So already back about 12 years ago, I already I already prepared auditors to be familiar with the use of technology to assess or measure the level of deforestation in Indonesia. Okay. Also, back before that, I was involved in the use of the same technology, satellite remote sensing, to assess the success or the effectiveness of a social responsibility program of a company, of a mining company here in Indonesia. So actually, this technology has been there for a while. Well, the advance in information technology, okay, as we live in the digital era, actually, it enables us to prepare a more accurate ESG reporting. We'll get back to that later a little bit, but in general, the use of information technology will increase the speed and coverage of data collection, enhance the quality and measurement, and facilitate communication and public participation of the reporting. And if we see here, actually, this is what I'm presenting today, that ESG reporting covers 3 important areas, okay? Corporate social responsibility, okay? Environmental sustainability, okay? And governance or transparency issues, okay? And if we look at the trend now, okay, this is because, okay, one of the motivation or one of the drivers of this reporting is because of the concept of sustainability, or companies now are motivated, if not forced, to operate based on this 5 P's principle: prosperity, people, planet, peace, and partnership. And that concept is already defined a little bit further in the Sustainable Development Goals that covers what is needed, okay, to aspects of performance that will lead to prosperity of people in general and planet. So actually the description, further detail of the 5 P's are in SDGs. Okay. And if we work a little bit closer, okay, that actually the main principle of this concept is that we do not inherit this world from our ancestors, but we borrow it from our children and grandchildren. so that we have to give it back to them in pristine condition. Okay. Or in the world of UN World Commission on Environmental and Development, meeting the needs of present generation without compromising the ability of future generations to meet their own needs. Okay, so this is the main philosophy of this, 5Ps principle. Okay, SDGs and the requirements of company, not the requirements, and the need to company to prepare SDG reporting. When we talk about report, then it's about the data collection, measurement, and reporting, and communication and feedback. And again, information technology enable us to, ease the burden of the load of preparing ESG reporting. Okay. We see here that what then is ESG reporting? Let me just briefly explain this. Okay, that ESG reporting is actually a report about the environmental practice or green business practices by a company. Okay, we see here that according to a corporate research and management, environmental strategies or initiatives enable companies to produce less waste, improve energy efficiency, and fewer environmental fines and damages, all of which is believed that will translate into cost saving and higher profit margins. And the success of several companies that follows this green philosophy inspired many other companies. Okay. The proper use of management of natural resources will be viewed by investors as a reflection or indicators of a company's management of other resources. This will lead to better investors' confidence that will produce higher stock returns and lower cost of capital, which can potentially increase corporate values. This is actually the drivers of ESG reporting. Okay. Strict adherence to proper ESG practices can expand customer base by attracting environmentally aware customers. The company introduces new green products, processes, or new appeals as a caring company. So this is a company's appeal to expand the market base, okay, to expand their market base, to attract more customers. So then good ESG practices can also have positive effect on corporate reputation and brand values, which will lead again to long-term value creation by attracting a more talented and engaged workforce, as well as more satisfied and real customers. So it's expected that by doing green-based philosophy, companies will attract not only more customers, but also environmentally aware a workforce. Okay. In a nutshell, then, ESG reporting can be defined as a set of reports, okay, that describe the practices that companies implement to reduce the potential negative impacts or enhance positive impacts of their activities on the environment, society, and governance bodies. Okay. So ESG reporting is a report of a company's activity, okay, that are friendly not to the environment in a broader term, okay. So it's important then to note that ESG investing, this is more on the user side, okay, differs from CSR and impact investing. Okay, if we look further here, okay, there are differences in ESG investing, socially responsibly investing, and impact investing. Okay, ESG investment focus on environmental, social, and governance factors that guide investment decisions. So this is the broadest what a basis to make investment. Usually, I'll get back to that later, is adopted by institutional investors. And this is if a CSR investment is narrower in focus. The focus is on companies' responsibility to society, and impact investments aim to generate measurable and positive social or environmental impact alongside financial returns. So impact investment has been, therefore has been in practice for a while. Okay, and also CSR investment. Okay. But then now a recent development is ESG investing that covers the whole thing. Okay, a more broader definition of environment, as social, economics, natural, and even all parties involved or stakeholders. Okay. Briefly here, this is the a history of the what I call that asset under management, the trend in investment in green-based companies or stocks. We see here that it's increased substantially here, okay, during the last 15 years, okay. Globally, this is globally. I'll describe that later in Indonesia, okay. And one of the problems in this area is developing a measure, metrics to assess the ESG, the environment, the social and governance impact. Okay, at present there are many framework, many approach to measuring these environmental, a social and governance impact. Okay. This is, for example, MSCI ESG score. Okay. We see here there are 3 pillars here: environmental pillars, social pillars, governance pillars, and under each of the pillars or dimension, we can break it down further. Okay. And we look just briefly here. There is another here from Brightest. Okay, how to measure the ESG. But more specifically, when we talk about measure metrics, then these are the key performance indicators of performance that presumably will be used by investor as a basis to make the decision. Okay, this is an expansion of the ESG by Brightest. Okay, what aspects to measure, okay, what dimension to develop to make or to prepare ESG reports. Just briefly here because of the time. Okay, so those are a little background about the demand for ESG reporting and the difficulty the difficulty in measuring the ESG aspects of ESG. Okay, and in general, these are globally the challenges or problem of ESG reporting. Okay, first, because there are multiple ESG frameworks. I already mentioned that before, and it's a new trend, as a new thing. Well, it's a thing now for companies. Okay, it's still evolving. Although, well, I will talk about it, a little bit later. That there are IFRS S1 and S2 try to tackle this issue. Okay, but essentially still evolving. Okay, And it is a very complex, management system, interdepartmental, what do you call it, knowledge, okay? So that's why it's very complex, okay? And it's not easy to, to understand and to quantify it, especially when we talk about, a company reports, it should, relate to basis to make decision by investors, okay? And okay, more specifically, how the ESG report then relate to risk assessment, okay? So quantifying, determining the impact of ESG reporting and risk is also a challenging work, okay? And lastly, ESG performance, okay, is of course should be expected, not just a feedback, but also a feed forward, okay? And from these five, okay, global general issues, if we see here that, okay, the recent, development with the, again, IFRS S1, S2, yeah, is it moving to international standard? What will be the challenges, okay? And when we talk about, information technology, digital revolution, and actually it will makes the job of preparing ESG reporting, easier, relatively speaking, though. So information technology enable companies to deal with these three issues, with the complexity, measurement, up to date, and feedback and feed forward. Okay. Okay. So again, I already mentioned that International Sustainability Board, okay, sorry, International Sustainability Standard Board, ISSB, already launched IFRS 1 and IFRS S2, in late June of this year in the conference, okay, which is a new era of sustainability related disclosure in capital markets worldwide. So again, the question is, okay, what will be the challenges if we want to adopt this as an international standard for ESG reporting? Okay. Of course, it's expected that these new standards will help to improve trust and confidence in companies' disclosure about sustainability to inform investment decision. Again, okay, it's expected that with this standard, it will enable investor to assess, okay, to of course to read, to understand the ESG aspects of a company, practices of company, then to incorporate that into risk assessment and investment decision. Through this standard, ISSB introduces a common language for disclosing the effect of climate-related risks and opportunities of company prospects. And I quote here, the ISSB standards are designed to ensure, that companies provide sustainable related information alongside with a financial statement. We'll get back to that later, okay, the problem with this, okay, in the same reporting packages, okay. And they further say that they are also built on the concepts that underpin the IFRS accounting standards, which are required by more than 140 jurisdictions. The ISB standards are suitable for application around the world, creating a truly global baseline. Okay. So these are the recent development. Okay. And what about in Indonesia? Well, actually, if you look at the history, okay, the environmental reporting, the environmental impact of the company information, a practice or operations, or actually the oldest one. Companies has been, reporting, the environmental impact of their activities for a long time. Okay, decades ago. Okay, and even then, there are agencies that determine the rank of a companies in this area. There's like, if I'm not mistaken, a gold and then something else, and the worst one is the black, if I'm not mistaken, right? Okay. So and another thing here that that's for the reporting aspect. So in terms of the historically, we can say that, you know, companies have been reporting the impact of their activities, business activities on the environment for a long time. What about the recent trend? Well, the green movement worldwide. This is the government, Indonesia. Okay, Indonesia government has committed, you know, has committed to reduce the environmental impact, especially for energy, okay, of, you know, economic activities. Okay, these are targeted in 2015. The target is to you know, I think it's 20 something, 23 something, I don't remember correctly. Okay, but in 2023, 22, okay, the realized a energy mix or portfolio is still under the target. Okay, under the target. So that means that in the future, the government will try hard to motivate companies to adopt a green energy. Okay, and I've been involved in, you know, several development of a green energy, especially green electric power in Indonesia. Okay, in the last 4 years. Yeah. This is the in terms of the investment in renewable energy. Okay, investment. It's increased, but, you know, still below the expectation. Okay, so this is the investment in renewable energy. Again, that's actually we can the impact of this we can see from the slide before. Okay, the investment is still compared to in other areas. Okay, so in other in a fossil-based energy. Okay, and this is the different another driver or another important event is the you know, the government's program to develop the government's agenda to develop a green industrial parks, or we call that here green industrial estate. Okay, this is one that I get involved. I developed this framework. It's called the circular economy. So a state-owned enterprises collaborated to develop a green industrial estate somewhere in South Sumatra, which is based on what is called the circular economic principle. Okay, this is the framework that I developed. So that in that green park, in that industrial park, these that will be adopted. Okay, the development of a green industrial park or estate. Okay, from the value chain perspective, and that this will require adoption of technology, not just the technology that are environmentally friendly, not just the technology, but also education for a company, recruitment for those who are environmentally aware. Then, okay, the industrial complex or park should embrace the society so that it will not, you know, give a negative impact, but instead give a positive impact to the society. So this is the framework that I developed last year for a certain green industrial park here in Indonesia. Okay, that's the recent developed event. Okay, and a governance program. Okay, in terms of policy, we can see here that the trade policy and carbon cap and tax measure in Indonesia are resumed. Okay, I'll get back to this soon. Okay, this policy was supposed to be implemented in July 2022, but were later postponed until 2025 due to global uncertainty. However, in the same year, the Ministry of Environment and Forestry issued a ministerial regulation number 21, is last year, which governs general provision related to carbon trading, carbon offsetting, carbon caps, and carbon taxes. The Minister of Energy and Mineral Resources has also issued a ministerial regulation or permit number 16, which last year, which sets provision on how this initiative will be implemented in the energy sector. Okay, the plan will be divided into the phases. The first phase starting from 2024 to 2024, 2023 and 2024, focusing on coal-fired power plants. The regulation also establishes sectoral carbon limits for the energy sector, which are divided into several levels based on the size and type of power. So this is the regulation that is adopted. Okay, that there will be a cap in terms of the carbon that should be a maximum carbon that is purchased by a company. Those companies that can produce a carbon below the cap can then sell the difference to companies that produce carbon emission higher than the cap. So this is the carbon trade aspect of it, and the OJK, the Indonesian SEC, has been discussing about developing a carbon market for this. Okay, to facilitate the implementation of this carbon tax and trade. Okay, and this is the ESG framework in terms of regulation. Another regulation here is ESG framework and a manual of the Minister of Finance. The Minister of Finance issues this manual. There are 10 ESG standards, okay, that covers 10 aspects of things that the company should be aware of. Okay, starting from a pollution control until a risk and control. Okay. Just briefly here, and this is the road of the sustainable finance issued by OJK, issued by the Indonesian SEC. That covers again 8 areas. Okay, from sustainable business strategy and practice, governance, inclusive, coordination and collaboration, until responsible investment. Again, this is the roadmap prepared by the OJK. Another regulation here, especially about the ESG reporting, starting from 2021, the OJK, Indonesian SEC, or the Financial Service Authority, through regulation number 15, sustainable report. Okay, these requirements were emphasized by the OJK letter number 16, 2001, on technical guidelines for the preparation of annual reports and sustainability reports. Okay, for issuers and public companies, which highlight the submission of sustainability reports. Okay. So this or the recent regulation, but again, I already mentioned there, but the practice of reporting the impact of a company operation on environment has been there for ages, okay, for many years. And the companies already have been reporting the government related performance, okay, activities I think since at least 2010, many companies actively have reported the governance, related performance or governance related area. Okay. Okay. Again, this is another reporting here that there was only one okay, ESG-based mutual fund product with general funds. Okay, about 6 billion of IDR. But by 30 December of 2020, it has reached to 14 products with more than 3 trillion rupiah. So again, it's already increased substantially. Also, there's a Sri Kahati. This is a sustainable responsible investment. What index? This is, have a green index, even several green index here. Okay. Here in Indonesia, okay, or the last one is this one, the IDX ESG leaders. This is an index, okay, a green stock index, okay. It's not on the environmental, social, and ESG-based stock index, okay. And so there is a Sekahati, there's a IDX ESG leaders, okay. Just give you a overview about what happened here in Indonesia. This is how. The index are prepared by the OJK. Okay, there are 3 phases here, but up to now there are some 25 companies a part of the ESG index. We call that Kahati ESG index family. Okay, and this is the give you an overview about the performance of the gross return of the green index compared to a traditional index. We see here that a green index outperform, or ESG index outperform the traditional index. Okay, this is until 2021. This is another one. Okay, the Kahati index, as you see, the green one. Okay, is the green index. It's higher than the rest, the IDX 13, the S30 index of 30 companies, okay, and even LQ45, the most active, index, the 45 active index stock in capital market here in Indonesia. Okay, if we look further here, okay, the recent development here is a survey done by Mandiri Institute, okay, recently, a survey conducted by Mandiri Institute, found that 70% of 310 investors surveyed experience information constraint regarding ESG information or data. Okay, so they have difficulty in accessing this information, ESG information. Only 25% of investors invested in ESG products, so it's still very low. Okay. In terms of the percentage, okay. In addition, 52% of the 190% publicly listed company in Indonesia do not measure their carbon emissions footprint. Okay. Another statistic here: 30% of these companies do not set targets regarding sustainable and climate risk in their risk management. And respond to this event, currently the Financial Services already mentioned that, preparing the draft of the regulation. Okay, but again, remember this also is indication that the requirement is not mandated strictly here in Indonesia until now, at least. Okay, and this is another result of the survey. More importantly here, that quoted from Bahana Tissue Investment Management, okay, TCW, Indonesian investors, this is very important here, especially retail, okay, not institution. The majority haven't made ESG accounts. Yes.
Interrupt. Your time is 2 more minutes for the presentation.
All right. Yeah. So this is the use is still very low. Okay. So this is the Indonesian situation now. Okay. What's next then? Okay. What's next then? Well, of course, one is how to educate the retail investor, especially retailers. Okay. about what it is, how to educate, then of course give them access. Okay. Until now, the variation is still very high. Okay. In terms of the structure of reporting, the content, the variation in Indonesia is still very high. And investors still don't know, how financial performance relate to this, ESG performance. And cost and benefits, the cost is very high. It's very expensive to develop this, okay, to measure this, okay. And then the question for our education system is for accounting. First, this one blurring actually the accounting management and financial accounting. So where's the boundary? This is a domain of financial or management accounting. Okay, so this is very important for universities, how to prepare the graduate, okay, how to integrate this important trend into the curriculum. Okay, will it be a concentration? Is it an undergraduate or is math? I think it's an important aspect to discuss it. But one thing we should remember that ESG reporting is still at an early stage here in Indonesia. Okay, but the future looks pretty promising, but it's very challenging. That concludes my presentation today. Thank you very much.
Thank you, Professor Bambang, for a very insightful presentation. Now I'll open the Q&A session. I'll read the questions from the audience in our Slido application. We have some questions here. The first one is from Asa Adi Grahita from Universitas Merdeka, Malang. Is there a more effective way to increase company awareness in maintaining environmental impacts in the future, instead of just reward and punishment?
Good questions. Of course, is there any way to more effective educate companies? Very good questions. Okay, actually, in reality, they understand the importance of this. Okay, but their perspective is very on compliance basis. So if it's required, then they're gonna report it. If not, then usually they put less important than that. But actually, in terms of understanding this concept, they do understand. Okay, that the importance of the report, but the willingness to report is very low, because right now they still follow the compliance principle, and secondly, many investors still not use this as an important decision in making, important aspect in making investment decision.
All right. Thank you, Professor Bambang. Next question, please. What is the current status of ESG reporting in Indonesia? Actually, you have mentioned it in your PowerPoint just now, the current status of ESG reporting in Indonesia.
Yes, exactly. It's still at the early stage. Although another aspect, the environment and governance has been there, but as an SDG reporting is in very early stage. For example, some company report the ESG reporting separately. Others just, like part of the annual report. So it's still in very early stage in Indonesia.
Okay, because it is not a mandatory for them to disclose an ESG report. That's why it is still in early stage.
Exactly.
All right, thank you. Next question, please. The third question from Wasila from Universitas Merdeka, Malang. In what ways does digitalization impact the accuracy and transparency of ESG data and and how can accountants ensure the data integrity? The second question from the top. In what way does digitalization impact the accuracy and transparency of ESG data, and how can accountants ensure the data integrity?
It increased transparency substantially, and also increased access. I already mentioned that briefly before, because then with the digital in a digital world, you can have data on a daily basis, on a monthly basis. That's increased again the speed of a report. And also it's easier for stockholders to access that information. Okay, but in terms of the accuracy of measurement, it helps a little bit. But then it's still again, in terms of accuracy, it's not affected heavily on digitalization, but more on the methodology. On the methodology, for example, for remote satellite remote sensing to measure the deforestation or the development of a rural area, for example, it helps a little bit. Okay, in terms of accuracy of measurement, it doesn't really help a lot, because there's more on an economics, social methodology.
Okay, thank you, Professor Bambang. Next question, please. Okay, from Adi Putra from Universitas Merdeka Malang. Oh, sorry, the second question from the top. Aninda Deswanti from Universitas Trisakti. How is the correlation between SDGs and ESG principles, and is there any differences between ESG and sustainability?
It's when we talk about sustainability, it's a broader concept than SDGs. Okay, when we talk about sustainability in terms of the SDG, it's much broader context compared to SDG. Okay, but if we implement SDG properly and using, ESG properly and using SDG as the basis, then that will be aligned. But many companies already try to incorporate that. I'm lucky to get involved in this area in the last, like 4 years. So it's strongly related. But in terms of the, the concept, sustainability is broader than ESG.
All right. Thank you so much, Professor Bambang, for answering the question.
Sure.
We'll have a few more questions. But because of the time limit, I have to stop now. And once again, thank you very much for a very engaging presentation.
Thank you so much.
Thank you for answering the question. As a token of gratitude, please allow us to present this certificate of appreciation to you.
Thank you so much.
You are most welcome. Next, we will listen to the presentation. Thank you again, Professor Bambang Riantolis.
Sure.
We will listen to the presentation by Dr. Ari Pratama. Can we have the CV, please? Thank you very much. Without further ado, Dr. Ari Pratama, the platform is yours.
Okay, thank you very much, the Master of Ceremonies, and good afternoon to all ladies and gentlemen. And first of all, thank you very much for inviting me in this webinar. And I also would like to extend my congratulations and also my thanks to the previous speakers for their fine speech. And of course, based from what I already saw and heard from the presentation, I think we learned a lot, especially about our role in this digital era. Maybe to make it short and sweet, I will move to the presentation. So I will share the slide now. So I hope everyone can see my slide. So the title of the slide, as requested by the committee is about the integrated reporting in the Southeast Asia. But I decided to modify the title a bit. So my presentation title will be Current State and Future of Corporate Reporting. And of course, I will do an in-depth study on the integrated reporting. So I only have two agenda actually. So the first agenda will be philosophy and context of the current and future corporate reporting. So it will be a short, brief presentation about the context of the corporate reporting, because before we move to the integrated reporting, before we understand the definition, the content of the integrated reporting, of course, we have to understand why there is an integrated reporting now. Perhaps some of the stakeholders or even some of the accountants still wonder why the corporate reporting need to evolve. We already have financial statements, but why we need to change from financial statement to the integrated reporting? So of course, we have to understand a bit about the philosophy. And the next one, I will explain to you about the concept and the future. Why? Because integrated reporting now still exists. However, as the previous speaker already said, we have a new development here about the corporate reporting. Recently, just maybe 1 or 2 weeks ago, the International Sustainability Standard Board issued the IFRS S1 and S2. Of course, this is a very big change, and we also wonder what the integrated reporting can play to improve the sustainability reporting and also to improve the corporate reporting as a whole. So I think that will be my agenda for today. And also on the last part of my session, I will share with you my research about integrated reporting. I will only explain 2 of my research about integrated reporting, one in the private sector and the other one in the public sector. Okay, so I'll just move on to the next slide. So on the next slide, I will discuss with you about the philosophy and the context of the current and future corporate reporting. And I hope that everyone here can see my slides, although I cannot change to the slideshow mode because my slides suddenly freeze when I go to the slideshow mode. So I hope everyone can still see the writing or the graphs clearly in their laptop screen or at their mobile gadget screen. So I will start my presentation by explaining to you that actually the practice of this sustainability reporting or the practice of the integrated reporting is not something that we not predict before. Well, as stated by the previous speaker, we understand that the revolution of the corporate reporting is happened so fast. Previously, maybe 5 years or 10 years ago, there are not many people talk other report except financial statement. If we talk about financial statement, then that's all. That's what the corporate report all about. But suddenly, as you can see, there are sustainability reporting, there are integrated reporting, even now there are climate change reporting, there are diversity reporting, there are governance reporting. There are so many types of reporting. So is this something that happens suddenly, or is it predictable? So as you can see on the slide, actually in the 1976, the Institute of Chartered Accountants in England and Wales already predict at that time. They published what they called at that time as the corporate report. So the corporate report at that time published some major findings and recommendation. And I won't read all the reports to you today, but as you can see on the last statements, at that time on 1976, the corporate report already predicted that there will be a need for an additional statements. So from 1970s or 1980s, our profession already studied about the financial statement, and they reached the conclusion that in the future, financial statement is not enough. Why? Because financial statement has limitation. And of course, the user's expectation has no limitation. So we need to evolve. Okay, then I'll explain to you about the second report. There is a stamp report made by the Canadian accounting profession at 1980s. At that stamp report, they identified 4 objectives of corporate financial reporting. One is accountability, the second is uncertainty and risk, number 3, change and innovation, and the last is complexity and unsophisticated uses. We understand that the financial statement is a tool for accountability. Why? Because it reports the past performance. It reports the past financial position. So by publishing the financial statements, we already accountable. But let's say not all the historical information can provide the last 3 objectives. Historical information perhaps cannot provide enough basis for us to assess about uncertainty and risk. They even cannot explain about the change and innovation, except this is a change and innovation that already made in the past. But if we talk about uncertainty, we talk about change and innovation, we talk something that happened in the future. Well, if I quote what the previous speaker said, we are not just looking backward, we are looking forward. Risk is something that will happen if we are not prepared ourselves. Change and innovation is how the way we prevent the risk to happen, to take the opportunity. So is the financial statement can accommodate all these 4 objectives? Well, the clear answer to that is no. Okay, so financial statement provide tools for accountability, but of course they have limitation in providing the information about risk, about change, and even about complexity. So if you are all do some research on the financial accounting and also the financial statement, perhaps now you understand why the IFRS is now focused more to the forward-looking information on their recognition and measurement side, and on the disclosure side, they provide more extensive disclosure. Why? Because that's the way for the accounting standards and also for the financial statements, so they able to provide the second, the third, and the 4 objectives of the corporate financial reporting. So that's why we are now talking everything forward-looking, not just provide information that happened in the past, but we need to predict what happened in the future, how we measure a thing or how we measure something in the number, but it's not based on the past expectation, not based on the hindsight, but it's based on what happened in the future. So we as the accountant now need also some prediction. That's why we need a data analytics. We also need tools for decision making because that's the demand of the users. So as you can see, the last statement of the stamp report here is unsophisticated user. Not all of the users satisfied with the financial statement. Some of them even think that by reading financial statement, I only understand about numbers. I don't understand about what really happened in the company's business because everything here stated in numbers. If you explain something not in numbers, you still relate it to the numbers. That means when we try to make the report, of course, we cannot just rely on the numbers. So in 1970s and in 1980s, accounting profession already predict that something big will happen. And of course, this is not something that happened 1 year later or 2 years later, but we feel it now. 20 years and 30 years later, there are new corporate reporting. But this is the point that this is not something that unpredictable. So this is just the example of the implementation of the corporate report and also the stamp report, that this is the current IFRS project. The current project is better communication and financial reporting, because as you can see, the goal here on the IFRS project is not about recognition anymore. It's not about measurement anymore, not just numbers. But here in the better communication, we talk about how we present the information and how we disclose the information. So not just about numbers anymore. So as you can see, there are several major projects here on the better communication in financial reporting, but this is one of the big projects is the primary financial statement. We still have to wait maybe 2 or 3 more years for this primary financial statement project to be materialized. But if you already follow the exposure draft, or if you attend the IFRS or Indonesian Institute of Chartered Accountant presentation about primary financial statement, you can feel or you can expect something big will happen to the face of the financial statement. There is still a balance sheet, there is still an income statement in the future, but their face, what they will inform to you, will change. And why they need to change? Because we need to communicate better to the investor and also to the creditor. For example, is it enough for us to just report a net income or the comprehensive income in the financial statement? Maybe that's not enough. It's not relevant anymore for the investor, because sometimes when investors do valuation, they not directly use the net profit, but they use other numbers. But unfortunately, that numbers are not presented on the financial statement. So this is the problem. As you can see on the next slide, so this is the problem of presentation and also the disclosure. Sometimes when you do a reporting, you report something or you state something that actually this is not relevant. Or maybe this is not enough. Like my previous example, okay, we need information about profit because this is representing a performance. But let's say not just a net profit, because net profit is basically a residual. This is what left. But of course, we need to analyze something, not just what is left. Okay, so this is actually the disclosure problem. So the current form of the financial statement perhaps also describe what we call as a poor communication. As you can see on the structure of the balance sheet or the structure of the cash flow, structure of the statement of the profit and loss, this is not something that user-friendly. This is not something that everyone can understand well. So that's why in the financial accounting, they also change. They also do a project that what we call as a disclosure initiative. And as you can say, this is the project designed to improve disclosures and also the better communication. So this is why we need to change, because we need to communicate better to the investor. So that's why financial statement now perhaps is not enough. Financial statement now needs to change. And if the financial statement cannot provide such a change, there will be another form of corporate reporting that ready to implement the change. And one of that corporate form is what we call as an integrated reporting. And this is something that I will explain to you now. So I will explain to you now about the framework and also about the future. So to summarize what we call as the integrated reporting and what is the differences between integrated reporting paradigm and also the financial statement paradigm, we can see it from many perspectives. The first is thinking. And thinking, I think, is a very important one, because you cannot create an integrated reporting if you don't implement an integrated thinking. We cannot divide or differentiate anymore. This is financial aspect, this is a non-financial aspect. When we talk about reporting, this is financial statement. All we need to do is just explain about financial thing. Non-financial thing, it's not my business. No, we as the accountant cannot say that anymore. When we create an integrated reporting, we need to realize what we need to report is the business process. in the business process, there are so many aspects that involve at the same time, working on the same time, and they are related with one another. So this is not something that happened in the isolation. Of course, this is something that happened simultaneously, and we need to explain that like this is something that happened in the business process. So that's why we need to apply what we call as the integrated thinking. Okay. And
I'm sorry to interrupt.
yes.
5 more minutes. So sorry.
Okay. All right. I'll try to move then. So there are so many aspects that we can integrate, but I think the most important thing is the integrated thinking. And as you can see, we also have several things that change. For example, in the stewardship, of course, in the financial statement, we only talk about financial capital. In the integrated reporting, not just financial capital, because financial capital is only one type of capital. In the integrated reporting, there are 6 types of capital. Besides financial capital, we have what we call as the human capital, we have intellectual capital, we have social capital, we have also manufactured capital. There are so many capital in the organization, and we cannot just talk about financial. The focus also the same. We cannot just talk about past. We need to talk also about the past and also the future, because what happened in the past, what we doing in the past, of course, it will have consequences, and the consequences is happen in the future, and it needs to be connected. And what is the strategy of the management to overcome or to face the consequences of what we are doing in the past? So there are so many differences when we create what we call as the integrated report. Okay, and there are also the difference on the time frame. The time frame in the previous report is a short one. This is a short, medium, and also the long-term one. In the trust, of course, at the financial statement, this is a narrow disclosure. We only talk about financial matters, but here we show all the business process, because we show that we have 6 capitals, and then from the 6 capital, we manage it into a business process. And the business process not only create one value, not just a financial value, but also 6 types of value. Okay, we also create human value. We also create intellectual value. We also create social value. We also create manufactured value. So basically, we give a value added contribution to the society. So the report should also explain that we not just create profit for ourselves, but we create something for the people. Okay, so that's the differences between integrated reporting and also the financial reporting. So to summarize what in the nutshell the integrated reporting is, we can start from the business development. So in the business development here, we have variation of the business practice. As you can see, the digital era and also the Industrial Revolution 4.0 create so many types of the business practices. And the user need to understand this business more, because sometimes this business is not as straightforward as they can see. This is maybe something that complex. This is something that we need to explain more. And now we not also having just stockholders, we have stakeholders, and these stakeholders demand high quality governance. So they will demand detail and also the comprehensive report. So this is the 2 objectives that we need to fulfill all together. We need to fulfill about the we need to fulfill, or we need to ensure that the users understand this report, and also we need to provide a detailed and comprehensive report. So if we try to combine the financial and the past-oriented information with the non-financial and future-oriented information, that's what we call integrated reporting. So as you can see on the below, we have what we call as the definition of the integrated reporting. So the integrated reporting have several characteristics. The first, it needs to be concise. although in my previous presentation, I said detailed and comprehensive, it didn't have to be a thick report. There are so many companies now that confuse themselves with integrated reporting and combined reporting. They think that by doing a combined reporting, they already prepared an integrated reporting. This is not the same. When you do a combined reporting, you combine financial and non-financial information into one statement. The result, a thick report, something that maybe the preparer itself is not understand, because I only combine this, combine that. So suddenly there are huge report, although I don't understand. I don't understand the connection between this financial and non-financial report. I just combine it. This is not the same. This is not making a thick report. This is a concise report. And what are they reporting? They report a value creation, but not just for the short term, not just for 1 year, but also for the medium and also the long term. So that's what we call as the integrated report. And as you can see on the next slide, this is the guiding principles and also the content element. As you can see, on the inner side, there are 7 circles. We call that a content elements of the integrated reporting. So these are 7 content elements that need to be disclosed on your integrated reporting. But in writing the integrated report, this is not the same like you write an ordinary report. You need to adhere yourself to the guiding principles. For example, you need to ensure that all the information that you wrote in the integrated report is all connected. And also you need to ensure that all the stakeholders' interests or stakeholder response are all included on this report. You also have to think about materiality and conciseness. Don't make a thick report, but make it a short but understandable report. Because sometimes reading a thick report is not conclusive at all, because suddenly you stop reading at the middle because you are too tired to read the thick report. Okay, so this is materiality and also conciseness. And also you need to ensure that the information provided is reliable and complete. That's why the integrated report is also need to be assured. There must be an assurance service for this corporate report. And the last, of course, about consistency and also comparability. And the most important, this is not just the detailed report, this is a strategic focus and the future orientation report. So this is how you wrote the integrated report. So you have to pay attention to the guiding principles and also to the content elements. So as the researcher, I did some research on integrated reporting, and just to summarize the current and the previous research say about the integrated reporting, so we can come up with 3 conclusions. Number 1, the integrated report will be useful for financial decision making. So it's also the same with the previous speaker. So this new IR report is also tested, and it already proved that it has an effect on the financial performance. However, the second research showed that this IR implementation is not as easy as they said. There are so many difficulties in implementing the IR. And the last, we cannot expect that all the companies will adopt the IR and results are all the same. No, the level of the IR disclosure will be vary across the sectors. Okay. So that's what the previous research say about the integrated report. Now we talk about the future state. Why? Because the organization that create integrated reporting, International Integrated Reporting Committee, as you can see, just merged with the Sustainability Accounting Standard Board to make what we call as the Value Reporting Foundation. And last June 2022, this Value Reporting Foundation already merged into the IFRS Foundation and now becoming an integrated part of the ISSB. So I don't want to talk much about the ISSB, but this is something that I also want to tell you, because this is a new trend of the financial and also the sustainability reporting. There are so many problems because we cannot just expect that this new integrated reporting implementation will be a success. Why? Because there are so many types of the report that look similar to integrated reporting. For example, ESG report, sustainability report, governance report, even combined report. Okay, there are so many types of reporting that exist, but all of them are fragmented. They say they want to report the same thing, but they have a different approach. And also, they have different objectives. It creates a confusion among producers and users of the sustainability information. Which framework should I adopt? And basically, to satisfy, perhaps I have to adopt this principle, that principle, this principle. So basically, we cannot adopt a single standard at all. We need to adopt multiple standards. It creates incomparability, it also creates inefficiency, and basically, it can create what we call a lack of trust. So that's why there are ISSB, and the ISSB will produce what we call as the sustainability report. Although, as all the previous speakers already said, this is not the ordinary sustainability report. This is a sustainability report that has focus on the investor, not like the GRI, because the GRI is a multi-stakeholder focus. It tells a story about the ESG, but not just for the investor. If you look at the GRI, it really describes about your environment, social and economic performance, not just for investor, but also for all stakeholders. But now the problem is how we interconnected the financial information in the financial statement to the sustainability effort of the company. So the ISSB here to provide a new kind of paradigm that we call a sustainability-related financial disclosures. So this is different, totally different from what the sustainability reporting on the GRI. Of course, there will be some differences, but they adopt a very different approach. Their approach is still on the financial terms. Okay, so this is how we integrate the sustainability report with the financial statements. And how we integrated that? We already have the IFRS S1 and S2, and the principle of the S1 and S2, one of the principles is taken from the integrated reporting guiding principle. They adopt concise and materiality. They also adopt what we call as the connectivity of information. So if you already read the IFRS S1 and S2, you can see there are so many guiding principles of the integrated reporting adopt on the ISSB standards. So this is a proof that integrated reporting is making financial statements more relevant now, because the financial statement now is not only talk about the past performance, not just talk about numbers, but the impact on the environment, the impact on the social, and also the future direction and interconnectivity of the information. So that's what the future of the integrated reporting. So perhaps, yeah, to end the slide, because I already warned by the Master of Ceremonies that I don't have more times perhaps to present to you. So the last slide that I want to show you is motivation slides. So why and how the accountancy profession must lead? Because when the ISSB produced the sustainability report, they announced that they will make IFRS S1 and S2. There are many accounting professions said, is it really happened? And is it really for accountant? Because maybe we still wonder whether the sustainability is something for the accounting. Well, as you can see, why we need to be on the center of the information, because basically we provide information and we are on the center of information. We also have relevant skills and competencies. We also globally connected. And as I say, we have assurance service. So everything that we create can be assured for its reliability and also for the quality, and it will create a trust. And basically, we have the ethical code that create professionalism in our work. So this is why we need to lead the charge in the sustainability report. How? There are four. We can advocate for smart policy and regulation. We can demonstrate sustainability-related skills and competencies. So we need to upgrade ourselves, not just the basic accounting, but also sustainability-related mindset and also skills and competencies. Okay, and then the last, be proactive on the climate reporting and champion the integrated mindset. And how you can champion integrated mindset? You implement the integrated thinking, something that actually adopt from the International Integrated Reporting Council framework, or the IR framework. Okay, so that's the last of my slides, and I already provide my slides to the committee, and on the last of my slides, I already show you some of my previous research about the integrated reporting practices in public sector and also in the private sector. But you can maybe read the slides provided by the committee later. If you have questions, then you can contact me by email. You can ask my email address maybe to the committee. And if you have questions about integrated reporting or ESG, then I'll be happy to answer the question now on the Q&A. So thank you very much, and I'll give back the session to the MC. Thank you.
Thank you, Dr. Ari Pratama, for a very enlightening presentation. Now I'll open the Q&A session. I'll read the questions from the audience. We have 3 questions. The first question is from Arinda Deswanti from Universitas Trisakti. As many reporting develop, such as sustainability report, integrated report, etc., in your opinion, how is our profession developing?
Okay, thank you very much for the questions. Let's just say the accounting profession is developing. So if the question say about how we should develop to accommodate the development of the reporting, that means in the short term that we have to upgrade our competencies. So that's why we as the accountant now not just need to understand about making a financial statements anymore, not just about journalizing anymore. Okay, because as you know, there are so many softwares, there are so many technology that can replace if we are just becoming a scorekeeper. Okay, so we need to evolve. We cannot just be a scorekeeper, but we need to upgrade ourselves into the attention director, and the last is the problem solver or decision maker. Okay, so with so many reporting type now, there are challenges, but there are also opportunities. And the opportunities is for the accountant that understand the new framework and the implementation of the report. So I really suggest to the profession and also to students, if there are students here, and I assume there are some students here joining the webinar, that you can do a research on the sustainability reporting or the new corporate reporting, because this is something that still need to explore more. And if you can explore more issues or explore more details about this corporate reporting and basically the user needs, then we can develop the more robust framework and more stable framework in the future. So I think that's how our profession needs to develop.
All right, thank you, Dr. Ari Pratama. Next, there's one more question from the Jupriono. Is there any evidence in practice in the field that integrated reporting concept is capable of overcoming obstacles in management accounting?
Okay, thank you very much for the question. You say in the question that is there any evidence in practice in the field that integrated reporting concept is capable of overcoming the problems in the management accounting? I think the answer, yes, there will be an evidence, okay, of that research. Why I say there will be an evidence? Because actually my research field is in the financial accounting, okay? So I understand this is the Asia Pacific Management Accounting Association. So this is actually a field that is not my specialization, but I also certain, yeah, that the management accounting can be benefited from this integrated report. Why? Because as I said to you, that the integrated reporting adopt the concept that we call as the value chain, or I'm sorry, the value creation. And in the management accounting, one thing that we always come in mind that when we do a management accounting, we need to ensure that there are value chain, okay? Or let's say we need to assure that on every business process, we need to create a value. So the value creation concept is something that come up from the management accounting, and it adopted heavily by the integrated reporting. So I believe that integrated reporting can solve many problems in the management accounting area, especially since management accounting and financial accounting in the past, they are very distinct. When we do financial accounting, when we do management accounting, it seems that we do something that quite opposite. The first, we report to the internal aspect, management accounting, financial accounting, we report to the external aspect. Now, actually, integrated reporting is a report that can be used by all the users. It's not just for the investor and creditor, but also it can explain what happened in our business process. So management accounting can play a lot of role in explaining the business process in the integrated reporting. And financial accounting can also play the role by creating a format or the template of report to present and to make the user understand about the information. So I think there will be an evidence of that, but we need to do more research in the future to support the argument.
All right. Thank you, Dr. Ari Pratama. One last question.
Yes.
Question from Sumara Aslira, Universitas Merdeka Malang. What are the circumstances of the material information in the financial statement that can influence the decision of users of financial statements?
Okay, so this is actually, I thank you for the questions, but about the materiality, so we understand that the definition of materiality, the item is material if the omission of this item in the financial statement can change or can obscure the financial decision making. So that's the definition of the material. So this is the indicators of the material item and how we implement that in the integrated report. In the integrated report, we cannot just look at the numbers. This is different from the financial statement. In the financial statement, you look this item material or not material by looking at the numbers. You compare the numbers with, let's say, total asset or the total revenue. So if it's reached the threshold, this is material. If not, this is not material. Well, that's the framework for the financial reporting. But for the integrated reporting, to determine something material or not material, then it will depend on the industry. So one thing or one information that material in one industry doesn't necessarily means it will be immaterial in other industry. So to help or to guide the integrated reporting or sustainability reporting, there will be or there must be a materiality map. So you can look on the Sustainability Accounting Standard Board. On the Sustainability Accounting Standard Board, they create what we call a materiality map. So on the materiality map, they already provide several issues that usually are material for that industry to be disclosed of. But that's the guidance. So that's not necessarily means that is a rule base, but that's a principle base just to guide the people how to make the sustainability disclosure. So you can see the sustainability accounting standard that created by the SASB, and then see the materiality map for more information about it.
All right. Thank you so much, Dr. Ari Pratama,
Yeah, thank you very much.
And for a very insightful presentation. Now, please allow us to present this certificate of appreciation as an expression of gratitude.
Thank you very much for this certificate, and thank you for having me here.
You're most welcome. Once again, thank you very much to Mr. Russ Porter, Professor Bambang Riantolis, and Dr. Ari Pratama, and also Mr. Jinto for the sharing knowledge with all of us. I believe we all learned so much from this session. To all of the participants, we will have 5 minutes break, and then we will continue with the second session. The second session will be moderated by Dr. Diana Zuhro. Thank you and see you again soon. Once again, we would like to apologize for any delay and any inconveniences caused by the delay. Thank you so much and see you again soon.
ladies and gentlemen, thank you for being with us in the second session of the APMAA webinar Indonesia chapter. In this second session, there will be three presenters. First, Professor Tulus Tambunan, PhD from Universitas Trisakti, and the title of his presentation is Recent Development of Indonesian MSMEs, Their Opportunities and Challenges. The second presenter will be Professor Robert Evans from Curtin University, Australia. This title of presentation is Transformation of the Management Accountant Role in Digital Era. And the third presenter will be Dr. Dia Sukanti Cahyaningsih from Universitas Merdeka Malang, and the title of her presentation will be Carbon Accounting in Renewable Energy Finance. Again, allow me to remind all of you that you can write your question in Slido application with format name underscore your organization and then followed by question. I would like to invite the first presenter of the second session, Professor Tulus Tambunan from Universitas Trisakti. The title would be Recent Development of Indonesian MSMEs, Their Opportunities and Challenges.
Thank you.
Tulus, the platform is yours. Start from now. Thank you.
Okay, thank you very much. So I'm very pleased, in fact, with today's webinar of APMAA by inviting me to discuss micro, small, medium enterprises. The reason is because most of micro, small, medium enterprises, especially micro and small enterprises, not only in Indonesia, but also in other developing countries, do not apply a good bookkeeping or accounting system. Even most of micro, small enterprises are rejected by banks because they do not have correct financial reports. So maybe next time, APMAA seminar will also discuss more seriously about these accounting problems faced by these enterprises. So may I share screen? Hello, moderator. Can I share screen?
Yeah.
Yeah, okay.
You can share screen, Prof.
Okay. Just a moment. All right. So my title is Recent Developments of Indonesian Micro, Small, Medium Enterprises, and especially their opportunities and challenges. Just a moment. These enterprises, as in other countries, are very important because well, maybe I start first by definition. Micro enterprises in Indonesia are those that have net assets up to 50 million rupiah, so very small, or annual revenue from sales or turnover up to 300 million rupiah, while small enterprises, those which have net assets over 50 million rupiah up to 500 million rupiah, while medium enterprises are those have net assets over 500 million to 10 billion rupiah, or have annual revenues from sales more than 2.5 billion rupiah up to 50 billion rupiah. These enterprises are very important. If you look at here in the snapshot of Indonesian micro, small, medium enterprise development, then you can understand they account for over 90% of all firms in the country, and also employ 99 million people, around 97% of total employment in the country, and they account for approximately 57% of Indonesian's GDP, and only account for 24% of the population. And majority are self-employed enterprises, so very, very micro, without formally hired paid employees, usually using family members, unpaid family members. This information is based on data 2020. Their number is huge, and they scatter widely throughout the rural areas. They are very labor intensive, including for low or unskilled job seekers. They are mainly agriculturally based as well as agriculturally oriented activities, and they use appropriate technologies to factor proportions and local conditions. And different than large enterprises, micro, small, medium enterprises, especially micro and small, are less dependent on import of raw materials, and they're able to grow, even stay in business during the economic crisis. It was evident during the COVID-19 crisis, 2020, 2021, most of them are survived. And they serve markets of basic goods for medium to low income households, and they produce simple production tools for producers as well for farmers. And they provide business opportunities to women, low-skilled youth, and disabled people. So the existence of micro, small, medium enterprise is also relevant when we are talking about sustainable development goals, especially with respect to women empowerment. And the type of products they made according to local conditions, such as availability of natural resources or raw materials and consumer goods. But although we used to talk about micro, small, medium enterprises as a group, but in fact they are very different. Micro, small enterprises are very different than small enterprises, and also very different than medium enterprises. As you can see here, for example, with respect to formality, most, if not all, but most micro enterprises operate in informal sectors and unregistered, while small enterprises, some of them operate in formal sectors and registered, and they pay taxes. While medium enterprises, of course, because medium already established, they all operate in formal sectors, registered, and pay taxes. With respect to location, for instance, majority of rural of micro enterprises are operating in rural areas, while, for instance, medium enterprises mostly are found in urban areas. And with respect to organization and management, in micro enterprises, the companies run by the owners, no internal labor division, no formal management and accounting system. While, for instance, with respect to medium enterprises, many companies hire professional managers, many have labor division, a formal organizational structure, and formal accounting system. And also with respect to, for instance, nature of employment, micro enterprises, majority of them use unpaid family members, while medium enterprises hire wage laborers and have formal recruitment systems. Also, with respect to nature of production process, they are very different. For instance, micro enterprises, in micro enterprises, degree of mechanization is very low, mostly manual, and low level of technology. While in in the category of medium enterprises, many have high degree of mechanization and have access to modern technology. Also with market orientation, majority of micro enterprises sell their products only to local markets and to low-income consumers. While with respect to medium enterprises, all sell to national market, and many of them also export. And also many of them serve middle and high-income consumers. And also with respect to owners' profiles, in micro enterprises, most owners have only low or uneducated and from poor households, while with, in the category of medium enterprises, majority of them have good education and are from wealthy families, and also they are different with respect to source of inputs, as you can see here, and also with external networks. And with motivation of the owners, most of the owners of micro enterprises do their business only to survive, not for profit, while medium enterprises all are looking for profits. And level of entrepreneurship of the owners is very low in micro enterprises and very high in medium enterprises. And with respect to female owner, in micro enterprises, there are many firms owned by women, while in medium enterprises is very few. And here, data last data I got from the Ministry of Cooperative, 2019. You can see here, micro, small, medium enterprises about 65, almost 65.5 million companies, about 90% of total companies in Indonesia. But within the micro, small, medium enterprises, the majority are micro enterprises. Is here 64.6 million companies, or about 98, almost 99%. And here you can see the number of micro, small, medium enterprises in Indonesia increased steadily annually. Only if you look at year 1998, declined slightly because of the financial crisis in 1998. But during after that, they keep growing every year because, among others, because of market opportunity. And here I try to compare with other countries in the Asian Pacific regions, almost the same. Yeah? The majority are micro, small, medium enterprises, either in Brunei or Australia or Chile, China, and so on. And here, the share of GDP of micro, small, medium enterprises, slightly above 50%, slightly above GDP contribution by large enterprises. And another important aspect of micro, small, medium enterprises in Indonesia is internationalization. So when we are talking about internationalization, in fact, we are talking about the involvement of Indonesian micro, small, medium enterprises in global activities. And it can be through FDI, foreign direct investment. So micro, small, medium enterprises do investment in foreign countries. But with respect to Indonesia, there is no evidence, unfortunately. And besides FDI, also involved in export. And export can be direct or indirectly. What I found from my many studies on micro, small, medium enterprises in Indonesia is most of them, if they do export, most of them do indirectly, like this structure. Either they export the product through traders or collectors, or through importers, or through cooperatives, or they sell first to export large size companies. I'm sorry, maybe rather disturbed by my dogs. And here, if you look at Indonesian micro, small, medium enterprises are still very weak with respect to export, weaker than, for instance, Thailand or Malaysia. Here you can see that Thailand is #1, Malaysia and Indonesia is below that trend. It is based on report, last report from the Asian Development Bank. Here you can see that Indonesia is still very weak, micro, small, medium enterprises, when we are talking about export compared to our neighbors, Malaysia or Thailand. And here again, I try to compare with other countries in the Asia Pacific regions. Some countries have a very large share. For instance, here, Canada, 38.8%, while Indonesia is only 17%. And here again, other data about exporters from the category of micro, small, medium enterprises, Indonesia compared to other countries in the regions. So from the above figures, it will be interesting to know if there are differences between those countries with respect to, first, government trade regulations. Why export share of micro, small, medium enterprises in Canada, for instance, that was 38%, much higher than in Indonesia, which was only 70%. Is it because trade regulations in government trade regulation in Canada is more in favor of micro, small, medium enterprises compared to Indonesian government trade regulations? That need to be studied. And second, whether the differences because of differences in intensity and forms of government interventions, or it can be also differences in the readiness, for instance, capacity of individual micro, small, medium enterprises. And fourth, differences in other determinants, although indirectly, for instance, maybe different in infrastructure condition or quality, in logistics, in business and political environment, business culture, human resources, trade and training facilities, level of coordination between stakeholders, and many others. And variation with respect to export share, as we have seen before, is caused by a number of factors. First, level of national economic development. Second, micro, small, medium enterprises access to technology, finance, is very important, skilled workers, market information, and ICT, and others, including digital technology. And also caused by level of development of infrastructure and logistics, and also linked to entrepreneurs' knowledge and experience on international business and market orientation, whether they are inward looking or outward looking. Especially micro enterprises, most of them are inward looking. They only sell their products to local market and they are satisfied. And also because of government support, trade regulation, fiscal incentive, and trade finance. Here, one study show that micro, small, medium enterprises and large enterprises identified customs and trade regulation as major constraint in some economies in the Asian Pacific region for their export. And when we look at the data on micro, small enterprises in the manufacturing industry, if I use data from 2017, the main constraint is, we can see here, lack of capital. And the second one is marketing. And the third one is access to raw materials, and followed by access to energy and skill and transportation. So the conclusion from many studies, studies that I take a look, there are many obstacles faced by especially micro, small enterprises who do not do export or to participate in global value chains. One, lack of technology, lack of skills, workers as well as owners or the managers, low ability to innovate, lack of funding, including, I'm sorry. Lack of funding, including trade financing, lack of networking, lack of market information. Sorry. This one.
Excuse me.
And,
more. I think your time will be 5 minutes more.
Okay. And no compliance with international quality and other standards, technical regulation and conformity assessment procedure. But they still have opportunities. First, growing domestic market with total population in Indonesia keep increasing every year. So market also will increase, market size. Second, circular and green economy. The promotion of circular and green economy lately, in the past few years, will certainly generate a new market opportunity for all businesses, including micro, small, medium enterprises. And third, growing export markets. We have ASEAN, we have APEC, we have G20, and we have European Union. But micro, small, medium enterprises also have serious challenges. First, to get access to information, skills, technology, including digital, technology and finance. And second, to compliance with international equality and other standards, in technical regulation and conformity assessment procedures. And third, to improve the ability to innovate and also to connecting to supply chains and developing sustainability, while there are at least two main policy challenges in the country. For the Indonesian government, at least four main policy challenges. First, to formulate policies and strategies that direct and indirectly lead to optimal allocation of all necessary resources for production and global marketing, so that these enterprises have full access to all sources, including finance and technology, and to create a good innovation ecosystem, to create a good environment for micro, small, medium enterprises to do innovation, and to socialize all Asian, APEC, and G20 lead trade deals agreements through all available channels. And finally, to provide explanation, training, and monitoring through various forms, such as workshop to micro, small, medium enterprises, so that they know how to best use those trade agreements. I think that is my presentation. Sorry for my dogs.
Thank you very much, Professor Tulus. I think the data presented by Professor Tulus it will be very useful for us, for MSMEs researchers, I think. Next, I would like to open question session. There is only one question, Professor.
Okay.
How do Asia Pacific countries compare in terms of public policies that provide business opportunities for women, low-skilled youth, and persons with disabilities? Unfortunately, there is anonymous person, Professor. Okay, please.
Okay. Especially in developed countries, they are much developed than Indonesia with respect to these policies, because we came rather late with respect to this problem. But compared to US or Canada or even South Korea and so on. So I think we should keep learning from them how to provide policy to promote them through the development of micro, small, medium enterprises.
Thank you, Professor Tulus. Is it enough, your answer?
Yeah.
Okay, because there is only one question, so I think the presentation of Professor Tulus is over. Now allow me to present certificate appreciation for Professor Tulus. This is certificate Professor Tulus.
Thank you.
Thank you so much. Thank you so much, Prof. And ladies and gentlemen, we move on to the second presenters, Professor Robert Evans from Curtin University, Australia. Professor Robert will be present the presentation with the title Transformation of the Management Accountant Role in Digital Era. Professor Ivan, platform is yours.
Good afternoon, everybody, and thank you for this opportunity to present at your conference. As was mentioned, my topic today is transformation of management accounting role in the digital era. This, I think, is a particularly interesting topic for me because while nobody has a crystal ball and nobody can predict the future, it gave me the opportunity to speculate about what I think some of these changes will be based on my experience and my reading. So this is not strictly an academic paper, but it's really one about what I think is most likely to happen in the coming years and how that will impact upon the accounting profession and particularly management accountants. I will just share my screen. Okay, so to start with, when we talk about transformation and the digital era, most people are concerned first and foremost about jobs, about their careers, about whether this will lead to, I guess, a diminution in the number of accountants that are needed. And these are all legitimate concerns. I think we have perhaps two time horizons that we need to think about when we delve into this issue. The first one is in the relatively short term, and by that I mean possibly in the next 10 to 20 years. In the next 10 to 20 years, I don't expect to see a lot of dramatic change, and in fact I think it'll be more of a slow evolution and changes similar to what we've seen in the past. As I was preparing for this presentation, I recalled something that I read in The Economist magazine many years ago. It was actually, and I traced it, and it was back in 2011. And their cover page said how a new manufacturing technology will change the world. It referred to a new industrial revolution that would end the need for factories. This was The Economist in 2011. And can you guess which technology they were talking about? The technology was actually 3D printing. So they were of the opinion at that point, only 12 years ago, that 3D printing would be the next new industrial revolution that would end the need for factories and would change the world. Now, at this stage, 13 years later, this type of 3D printing is still relatively niche output. Now, it may still happen, it may still change the world, but you can see how slow the integration of new technologies is into business and practice. Just a couple of other examples. Blockchain, you would be all familiar with. A lot of hype around blockchain, but has it really translated into dramatic change in business? At this stage, it's pretty much restricted to cryptocurrencies. And at the moment, we haven't seen a lot of movement beyond that. Online learning in my field has been around for 20 years ago. And I can remember 20 years ago, people predicting that universities would to some extent be replaced by online offerings. And this just has not eventuated. And one of the reasons it's not eventuated is that people like to be lectured to by a real person rather than watching something on a YouTube or elsewhere. So the demands have been quite different to what we expected to happen. So the integration and adoptions of new technologies is not fast. This is those few examples. There are many others where technology has taken decades to be enacted in a broader sense in business. And so I suspect this may well happen when it comes to artificial intelligence and other of the related technologies. So when I look at this, I also put it in the perspective of history. And if I just go to my next slide, you'll see here that, there has been an evolution of accounting over centuries, in fact. And with each of those evolutions, I think it's fair to say that one thing has happened consistently, and that is that probably the number of accountants has increased, and also that the professionalism of accounting has changed and improved with each of these major changes. In terms of the numbers of people hired or the numbers of people working in accounting, certainly that has been impacted by some of these particular changes. I can reflect on the late 20th century there with advances in computing. I can remember when I first started as a student in accounting, learning a system called Kalamazoo, which was really carbon paper. And we were taught how to produce sales receipts and purchases through carbon paper and sending off various copies to different sections of the business. So you can see we've come a long way. My first job was an electric utility, which at that time had many floors and many hundreds of people working in accounts receivable, largely processing receipts and payments due from the electricity sales. By the time I finished in that job, only a few years later, that hundreds of people and many floors had been reduced to a very small section of about 10 people by the impact of computing. So yes, certainly the number of people working in the field of accounting changed, but what also happened was that the nature of the accountant also changed. That person then became a much more skilled individual. The people that lost jobs tended to be relatively low skill, individuals as well with low levels of training. So we can see, I think, lessons from the past in how we need to adapt when we are faced with new technologies such as AI. And one of those lessons will be about education and the continued need for it. So where do I think some of the technologies may change over, or some of the changes that may occur as a result of AI and those related technologies? I think we will continue to automate repetitive tasks. There are still numerous tasks that are done on a daily basis in accounting, which have the opportunity to be automated, and I think that will continue. We will also see improvements in data reliability. When we look at something like the cost of a product in say, a multi-product firm, now we know that to determine the cost of a product involves normally many cost allocations, and you can take it right through to activity-based costing. And we know that there's a lot of imprecision in those allocations, and there's a lot of assumptions underlying those allocations. We could hope that with new technologies, we will be able to record much more accurately the consumption of materials and labour and other elements, overheads, that go into making a product in a much more direct way, and therefore end up with much better ideas of costs and much more reliable measures of costs. This, of course, then leads to more robust data analysis, because we are now working with a much more real number when we talk about, say, the cost of a product. Then substantially our analysis will improve. We're also going to be enabled to have more sophisticated modelling and decision-making as a result of that. The sophisticated modelling and the analysis will often be built into the software, so it doesn't require for accountants to necessarily have high-level research skills or mathematical modelling skills. A lot of this will then be provided through the software that we use that will become more mainstream. This in turn leads to enhanced scenario planning with perhaps AI and others providing scenarios based on environmental scans that look out and try and gauge what is going to happen to our business. The scan may include a collection of benchmarking data. It may provide information based on historical data within the firm and bring these things together to look at different potential scenarios. I've put in here fraud detection, because fraud detection is something that also happens internally. Now, this may be seen as more of an audit function, internal or external, but nevertheless, it can also be picked up through management accounting processes. One of the great advantages of machines is that they can pick up patterns in data very quickly, much more so than humans can. And so when we're looking for fraud, we're often looking for anomalies in the data. And of course, that means that we can expect that machines will find those anomalies much more simply than perhaps we could, and draw them to our attention. And so I would think that this should enable us to detect fraud more easily. And of course, as I mentioned earlier, the advent of online learning has been around for some time, and it continues to develop, and in many areas is very strong. So we can facilitate through this mechanism continuous learning of our staff and of course ourselves. So what are some of the future trends? Basically, I think that we are obviously going to continue to build our reliance on AI over time. And as I said at the outset, this could be a very slow evolution, which may take decades to reach its ultimate conclusion. And we don't know where that conclusion will be, because we don't really know the level to which artificial intelligence will actually be able to achieve human level understanding. I think one of the things we'll see in the shorter term will be improved integration of financial and non-financial data, which is something that has been mentioned by earlier speakers, the importance of some of this non-financial data. Often these were seen as two separate fields, but we now are in a position where I think we can become much more integrated. The data can be collected through sensors and other mechanisms and fed immediately, costed in real time, rather than waiting. And this, of course, leads to better decision making. We can focus more on analytics and data interpretation to identify trends and predict outcomes. In the past, I think it's fair to say that a lot of our time has been spent in collecting data and in many ways sifting through data and trying to ensure that that data is as accurate as it can possibly be. So this was much of a management accountant's time. In fact, when I talk to my students, we often, in an exam, we might do something like a cost volume profit question, and we would say, you know, here's the costs, here's the volumes, determine the profit, or something along those lines. And I would point out that to them that when you actually get out of work, the difficult part is actually going to be establishing the cost. You know, that is given to you in an exam, but in reality, finding the cost of a product or a service in a multi-function business is incredibly difficult. So if you're in a bank, for instance, and you're trying to work out the profitability of your insurance arm that sells insurance to people that do banking with you, or on one level, you might think that's a simple job, but on another level, once you start allocating the central costs and all of the shared resources, it becomes incredibly difficult to actually work out whether or not that business is profitable. And so these are the sorts of things that I think good internal systems such as these technologies can help us with, can help develop that data much more effectively, produce it hopefully much more cheaply than we can today. And that allows us then to spend a lot more time as accountants on interpreting information rather than actually trying to collect it and analyze it. Measuring sustainability outcomes. I noticed that a number of your speakers were talking about sustainability as well today, and I see that as a really growing area for accountants generally, but particularly for management accountants. Being able to attribute costs and savings to efforts that we make, sustainable efforts and changes, is going to be incredibly important, not just for reporting to shareholders or to governments, but really to convincing our own managements of whether or not these adjustments are worthwhile. And to do that, we need to be able to put numbers on things that perhaps financial numbers on things that in the past, and this will require technology to assist us.
Professor, your time's
home. We've us already working at least 5 months.
Yeah.
Sorry, how long to go?
3 minutes.
Is time up or 5 minutes? 3 minutes, okay. So time working from home will be continue, and offshoring of tasks will continue because of the sort of technology that I'm using here at the moment will only improve over time, and that will make offshoring and working from home perhaps easier and also perhaps more efficient and more real in many ways. The use of virtual workplaces will become something that will be potentially be very similar to being physically in the workplace. And as I mentioned earlier, we can use technology to identify patterns and anomalies in data for fraud detection. Okay, I'll just finish with some of the skills that I think accountants may need in the future based on what I've just discussed. Strategic thinking is going to be incredibly important because a lot of the data that we've spent our time collecting in the past will now be able to be given to us. And so our main aim will be around explaining different scenarios, setting strategies, and communicating the information to senior managers. I think you're going to have to learn a lot more about sustainability and the measurement of that sustainability as part of your role, and being able to also provide assurance of the quality of those disclosures. Soft skills will continue to grow. We know that accountants obviously need to be good analytically. We need to be very competent in that area. But I think in a growing fashion, we're also going to have to be able to explain results and negotiate outcomes for our various parts of our business. And finally, continuous learning. We are going to have new technology. It is going to change the way we operate. And the best way to cope with that is to be continuously updated on how those technologies are affecting our business. So with that, I will say thank you very much and for the opportunity to present at the conference, and I'll happily take any questions that you may have.
Thank you very much, Professor Ivan, for the very important topic for all of us in this era. Next, I would like to open Q&A session. Okay, Professor, because of limited of time, I would like to give one question from Ratna Safriliana from University of Merdeka Malang. Accountant must be multi-knowledge that competitive advantage is not lost in competition in the world of work. What do you think, Mr. Ivan? So accounting have multi-competitive advantage, multi-competitive competence in now, in today's era. What do you think about it?
I think that is a very true statement, that accountants need to be more than, I guess, number crunchers, which is how we have been perceived somewhat in the past. Accountants can't simply be reliant upon analytical and technical skills in managing numbers. We also have to be able to be business partners. We need to be able to work with different aspects of business to explain results. We need to work with people who are collecting non-financial data and work with them to actually put numbers to their results, so that we can, in many ways, explain the impact of those non-financial actions. And that's, as I mentioned earlier, particularly in the areas of ESG. So I think for that, the skill requirements are going to be much broader than they have been in the past. Strictly, accounting standards and our knowledge of technical processes will not be enough to make a competent accountant in the workplace in the future. Thank you.
Thank you, Professor Evans. Now, Professor Evan, I will present a certificate of appreciation for Professor Ivan.
Thank you. It's been a pleasure to present at your conference, and I wish you all the best.
Thank you very much. Ladies and gentlemen, our third presenter will be Dr. Dia Sukanti Cahyaningsih from University of Merdeka Malang. She will present the presentation with the title Carbon Accounting in Renewable Energy Finance. Dr. Dia Sukanti Cahyaningsih, the platform is yours.
Okay. Assalamualaikum warahmatullahi wabarakatuh. Om Swastiastu. Good afternoon. Thank you for coming to this session. It's an honor to meet you here. maybe everyone is getting tired, but I'm sure everyone still want to continue this webinar to the end. Since the beginning, I have been warned that my time is very limited, and so I will shorten my presentation and complete it during the Q&A session. Please allow me to share the presentation. Carbon accounting and renewable energy finance in Indonesia. Okay, I'm sorry, my share screen is freeze. Let's share beginning. Okay. The carbon accounting is the process of measuring and tracking greenhouse gas emissions. It's cover counting the 6 of greenhouse gas coverage by Kyoto Protocol during carbon dioxide, methane, nitro oxide, hydrofluorocarbon, perfluorocarbon, and sulfur hexafluoride. Please. There earth temperature from 1880 until 2022 very high. The perception survey from the World Economic Forum Global Risk report in 2022 stated that climate change in the next 10 years is considered the risk that poses the greatest long-term threat. The increased temperature average the Earth's surfaces cause heat waves, thus reducing human capacity to work and thereby reducing productivity. Almost every day we use air conditioner for an average of 14 until 15 hours. The temperature feels hot day by day. Per capita greenhouse gas emission below G20 average, the numbers are high, but as we know, Indonesian per capita emission are 0.78 times G20 average. The significance of carbon accounting in Indonesia cannot be overstated. By accurately measuring reporting emission, business and government can identify for improvement and take action to reduce their impact on the environment. This not only benefit for the planet, but also help to create a more sustainable future for all. Overview, scope, and emission across a value chain. As we know, there are 3 scopes, direct and indirect. The direct GHG emission are principally the result of the following types of activity undertaken by company, such as generation in electricity, heat, or steam, physical and chemical processing, and transformation of material, product, waste, and employees. And the scope 2 emission are specially category of indirect emission. For many companies, purchases electricity represent one of the large source of GHG emission. And the scope 3 is optional, but provide opportunity to be innovative GHG management. In scope 3, employee business travel, waste disposal, contractor owned vehicle, and so on. Why carbon accounting is important? Carbon accounting is a crucial tool for Indonesia in this effort to reduce greenhouse gas emission and mitigate climate change. In addition to its environmental benefit, carbon accounting can also have economic benefit. By reducing emission, business can lower the energy and improve the efficiency, while government can attract investment by demonstrating their commitment to sustainability. The carbon accounting framework in Indonesia, the National Carbon Accounting System or NCAS, which our standardized system for monitoring emission, is one the framework essential element. The National Action Plan on Climate Change and the National REDD Plus strategy, which work to cut emission and advance sustainable development. Just two of the law and regulation that support the NCES, the paradigm used in practices and number of reporting tools, including the corporate responsibility report and the greenhouse gas inventory. The challenges and opportunities of carbon accounting in Indonesia. We have learned that carbon accounting is a crucial tool to fight against climate change. By measuring, reporting, verifying emission, we can identify areas for improvement and take action to reduce our carbon footprint. In Indonesia, carbon accounting plays particularly important in due the country high-level greenhouse gas emission. However, despite the challenges, there are also many opportunities for progress and innovation on this field. There's my team research have research on carbon accounting and published in Technological Forecasting and Social Change in 2022. There is a reputable journal in my research. To achieve that, we employ a dynamic, simulated, auto-regressive, distributed lag approach using time series spanning from 1966 until 2018. Our analysis investigates the relationship between economic growth, EZI, and carbon emission, especially focusing on intensities use of oil, gas, and coal. The research highlights important and transitioning to cleaner energy and implementing technological improvement industry heavily reliant on the use of fossil fuels. Renewable energy finance in Indonesia. As effect of climate change become apparent, it is clear that we need transition to cleaner sources of energy. This is where a renewable energy finance come in. Indonesia is a country enormous potential for renewable energy with abundant sources of solar, wind, and geothermal energy. Indonesia has opportunity to become a leader in renewable energy adoption. Indonesia has vast potential for renewable energy and is still relatively low with only 8.3%. The country energy mix coming from renewable resources. And to address this issue, the Indonesia government has launched several initiatives to promote renewable energy adoption, including the National Energy Policy, which aimed to increase the share of renewable energy in country energy mix until to 23% by 2025. And additionally, government has implemented fit in tariff and tax incentive to attract private investment in the sector.
Sorry, Bu Dia, your time is 2 minutes left.
Okay, Bu Diana, thank you. Maybe I conclude my presentation that in Indonesia, carbon accounting and renewable energy finance play crucial role in addressing climate change and promoting sustainable development. And carbon accounting allow business to measure and manage their carbon emission, leading to reduce environmental impact and improve operational efficiency. It enables company to demonstrate their commitment to sustainability, access new market, and comply with regulation. Meanwhile, renewable energy finance support the transition to clean energy sources by providing financial resources for renewable energy projects. Indonesia has vast potential for renewable energy, including solar, wind, and geothermal. Financing initiatives such as loans, grant, and investment program help incentive and accelerated the adoption of renewable energy technologies in this country. Okay, Bu Diana, thank you for this session, and thank you for all to joining this afternoon for our webinar, and have a wonderful evening.
Thank you very much for very insight topic completed by research result of yourself and the team from University of Merdeka Malang. Next, I would like to open Q&A session. Just one question, please. What steps can be taken to support the implementation of carbon accounting for MSMEs in Indonesia?
Okay, thank you for the question.
Maybe you can combine with the third question. Until now, how big is the influence of carbon accounting policies on reducing carbon emissions? I think the question is very interesting to answer.
Okay. Thank you, Bu Diana. To support the implementation of carbon accounting for MSMEs in Indonesia, the following step can be taken. Maybe first is raises awareness, conduct awareness campaign, workshop, and training program to educate MSMEs about importance of carbon accounting, its benefit, and the role of it play mitigating climate change. This can done through collaboration with industry, industry association, non-government organization, and government agencies. And the second step, we can provide guidance and resources, develop and disseminated guidelines, toolkit, and resources, especially SMEs for implementing carbon accounting. The material should provide step-by-step instruction, best practices, and the case study to help MSMEs navigate the process effectively. And I think capacity building is important. Offer training program and capacity building initiative to enhance the knowledge of and skill of SMEs in measuring, monitoring, And reporting carbon emission, this can include technical training on data collection, calculation methodologies, and the use of carbon accounting tools. I think that's my answer, Bu Diana.
Thank you. Complete answer, even though briefly. Ladies and gentlemen, this is a certificate of appreciation for Dr. Dia Sukanti.
Thank you.
Thank you very much, Dr. Dia Sukanti, for presentation. Ladies and gentlemen, finally, we come to the last agenda for today's webinar, closing remark, which will be delivered by Professor Norma Omar. Professor Norma Omar, the platform is yours.
Okay, thank you so much. But somehow my internet is a bit intermittent. But anyway, I hope it will not interrupt the speech. Okay, thank you so much. And first and foremost, I want to congratulate the Indonesian chapter for organizing a very interesting webinar today for the APMAA. I saw various topics being introduced in this webinar. So we started with, of course, I think we have Professor Ueno. First we have Professor Grahita welcoming participant, and then also Mr. Frankie Janim greeting all participants. And then Professor Ueno, who introduced APMAA and also explained the various activities that we are organizing, including webinars. I think nowadays, we are organizing a lot of webinars as part of the APMAA activities. And then we also have Mr. Ginto, IMA Regional Director for Asia Pacific, who talked a lot about digitalization, perhaps not just for IMA specifically, but also for the accounting fraternity in general. And then we have Mr. Ross Potter from who talked about digital transformation and finance of the future. Very interesting. How there were a lot in the Q&A. There were a lot of anxiety of people talking about losing job and also cybersecurity as a result of increased digitalization in the accounting profession. But we were assured that by both by Mr. Jin To, that I think as long as we keep on updating ourselves and improving our competency, we should not worry about losing job. Because at the end of the day, according to him, technology is developed by us, and then we should always be one step ahead of technology. And then we also saw other aspect of accounting, especially ESG reporting by Professor Mambang, and also integrated reporting by Associate Professor Dr. Ari, and also MSME in Indonesia by Professor Tulus. Initially, I was thinking, how are we going to integrate this? But it was interesting. In the discussion by Professor Evan, he mentioned that sooner or later there will be a closer integration between financial accounting, financial reporting, management accounting, and even governance. And in all this area, we saw the role of technology and digital transformation becoming more enhanced in order to improve ESG reporting, integrated reporting, as well as enhancing the strength of MSME in Indonesia so that they can become a global player. Yeah, and then of course, Professor Evan talked about a transformation of MA roles. Yeah, and a lot of this, sorry, a lot of this require us to learn a lot of new technology, including artificial intelligence in the areas of automation, data, reliability, in getting robust data analysis so that we can improve decision making. Yeah, so it is very interesting how digital transformation is useful in all these areas. And then we have Dr. Dia talking about carbon accounting. I was just wondering how can we integrate this? Again, I think one of the biggest challenge in carbon accounting and renewable energy finance is in getting accurate data. Certainly, I think with the use of digitalization, technology enable capacity, we should be able to get more data and more accurate so that we can contribute towards this carbon accounting and lesser carbon emission in the world. Yeah. So I think all in all, yeah, I want to again congratulate the team. Very interesting, wider, what we call it, wide, diverse topic. But in the end, I think you were able to put everything and how digital technology is key in enhancing the accounting profession. Okay, with that, thank you so much.
Have a great success. Okay. And then I'll also extend my gratitude to, of course, Professor Ueno as APMAA Board of Directors, Professor Norma Omar as the APMAA Deputy Chair, Professor Dian as Chairman of Institute of Indonesia Chartered Accountant Education Compartment for your continued support. And also for Mr. Ginto, he is Director Regional Partner Relation of Institute Management Accountant Asia Pacific for attending in person in Trisakti University. To all remarkable speakers, students, and colleagues, thank you so much for your presence and contribution. Through this webinar, we can learn that management accounting is developing. As Professor Norma Omar already said before, there is significant adjustment that we must do to fulfill the industry need. And as speaker suggests, there are some skills that we must integrate into curriculum, such as the soft skill. Professor Robert Evans already mentioned about it. And then Mr. Ginto also suggests that we can up our skills into technology skill and also caring with sustainability, especially in reporting issues. So everything that already present the speakers make us brighten about the future of the accounting profession. So please up your skills and do the best so your future will be brighter. Thank you again for all the participants. So see you next in China International Conference for APMAA. Thank you. Assalamualaikum warahmatullahi wabarakatuh. Stay safe, stay healthy, stay connected.
Ladies and gentlemen, the APMAA Webinar Indonesia chapter, which is currently being held at Merdeka University Malang, Indonesia, is over. I am Diana Zuhroh, moderator and also MC in this session. Thank you for your attention and participation in this seminar. Allow me to apologize again and again for the inconvenience and shortcoming in organizing this event. See you on the next webinar in China. Selamat berjumpa lagi. See you again in China. Wassalamualaikum warahmatullahi wabarakatuh. Thank you very much for all participants of this webinar. Thank you very much.